So this is about advanced auditing CA final amendments video. So in this video, what I'm going to cover exactly. So almost this will be around some 3 to 4 hours amendments video will be. So what I'm going to cover in this entirely. See, this introduction is very important. Please watch it without any failure. Now, if at all you are our regular course student, full course or smart course, or even those of you who have attended my revision class, getting it? So please, what I'm going to do in this is, first of all, let's understand what are the topics that are covered in revision. In the amendments. So the amendments were having these chapters. Like just let me, just a minute, let me show you what are the chapters. We are having amendments in corporate governance chapter. We are having amendments in peer review. And we are having again in Nbfc audit. And one more thing is ethics. So even my regular students, whoever have attended my regular class in Google Drive, please listen to this introduction very carefully. And in this video, all the amendments that are applicable for May 23 examinations and even for November 23 will be covered. For November 23, again we will get one more clarification somewhere in the month of July or August. So at that time we will discuss for November specifically. But right now, predominant objective is to May 23 exams. Now, peer review, we have something called peer review guidelines. Getting it? Entire peer review has been changed with the new guidelines. So that is called as peer review guidelines 2022. Now, very recently we have taken face-to-face class for revision, face-to-face revision. In that, we have discussed peer review guidelines 2022 very clearly along with the overall concept. So the same video you are going to watch. Right now you're going to watch some videos, right? In this video you have some timestamps, right? This is nothing but merged version of various videos. It's a compilation of various videos. Okay, so peer review guidelines 2022, the amendment as well as the overall process of peer review I have taken in the revision class, so that I'm going to attach. Definitely if you watch that, you will understand deeply. Okay, you will understand very in deep. Next one, or else let me do one thing. Peer review guidelines, no, instead of giving revision, I'll upload my regular class on the entire peer review. Okay, then coming to NBFC, same Nbfc also I have taken the revision class for Nbfc with brief, neat, detailed introduction, and I have covered the entire Nbfc revision marathon. Getting it? So where I have discussed revision plus amendments, completely have discussed. So this will come somewhere around 1.5 hour. This will come somewhere around 2 to 3 hours. I'll check it out and upload revision or regular, whatever is feasible, whatever is correct, suitable for learning properly. Getting it? Because in a regular class of peer review, we will be discussing so many things. It will be, you might feel it is very comprehensive. So I will think and upload. Anyhow, as you go by, you will understand. Getting it? But you simply watch this video till the end, this entire 4-5 hours of video, amendments video. Believe me, you are going to learn and get master grip on these amendments. You need not worry. Then coming to corporate governance amendments. In corporate governance, there is only one topic, which is audit committee, where one word is added, at least. The word added is at least, which I have already uploaded in my old marathon, November 2022 marathon. I have re-uploaded. Inside that you will find. Getting it? But anyhow, so, and there are many other amendments in corporate governance topic, but corporate governance, most of the topics we don't cover in our classroom. Even in a regular class, we don't cover what is risk management committee, what is remuneration and nomination committee, women director is compulsory, composition of board of directors, compliance by board of directors, all that topics we don't cover because they were all covered in corporate law. We don't cover them in audit, in our regular. Without covering this only, our regular class is somewhere around 140 hours, 140 to 145 hours regular in CA final. So that is the reason, again, if we cover all this corporate governance, it will go another 20-25 hours. Considering the weightage of this chapter, spending that many hours is not feasible also. So consider, and moreover, this is something which is already covered in corporate law, SEBI regulations. So that is the reason we don't cover this in audit. So even amendments related to corporate governance, we are not covering. Next, ethics. There is a new concept which is added, is Noclar. Actually, many think that this is a newly added concept, that it is not. Noclar concept is added in 2021 itself. which is originally applicable for May 2022, originally applicable for May 22 exams, but just a few days before exams, not few days, 1 or 2 months before exams, Institute gave a clarification that Noclar do not apply for May 22, and even for November 22 it was not applicable. Now, as per the latest, the academic update, whatever Institute will release in every exam, as per that, Noclar is now applicable for you. Noclar concept is now applicable for you. So that Noclar related 45 minutes video I'm attaching in the whatever the video, in the timestamp you will find Noclar video. That's the only amendment in ethics chapter. These are the chapters only which contain amendments, and I'm giving all the amendments in this particular video. So kindly watch without skipping it and watch in the same order. If you see the timestamp, I'm giving Noclar concept and related amendments at last in the timestamp. Intentionally I kept it at last. You need to watch it last. Don't watch that at the beginning. What is most important for the upcoming exam is peer review topic is more important, and Nbfc amendment is more important. So, I don't discuss amendment in Nbfc directly because people think Nbfc amendment is a 5 minutes thing. No, it's not. The Nbfc amendment, whatever I have discussed, is spread over 2 hours topic, 1.5 hour discussion. You need to watch that entire 1.5 hour to exactly understand the impact of the amendment. Because in Nbfc, the amendment is about classification part. The classification will affect almost every provision that we discuss in Nbfc audit. So, don't form any conclusions. Kindly watch this till the end without skipping any part of the video. You will definitely enjoy and definitely understand better. And complementary to these amendments, I have my revision marathon in YouTube, CA Final Audit Revision Marathon. I have uploaded 2 parts. 1 month ago, some 35-40 days ago, I have already uploaded Revision Marathon for May 23. That is around some 23 hours I have uploaded. If you complementarily watch that as well along with this, believe me, you are done for May 23 exams. You will get a decent exposure. I'm telling you, you'll get a decent clarity on the subject, better than earlier. Whatever the kind of clarity you have, I can say 3-4 times better than that. You will get more clarity. Okay, so take care. Continue watching the amendments. Now, like, sir, we are watching the marathon. Where can we download the material that you are using? Suppose no, if at all you are using my marathon, no. Just a minute. Amendments May 23, November 23 is there. You just open Class Plus app. You just open Class Plus. There in Play Store, there is an app called Shrestha for CA and CMA. Or why to that extent? Just open our website. Just open our website. Shrestha for CA. Just open our website. Okay. Here resources is there, no? Inside that CA Final you open. Actually, as of now, we have not yet added any, inputs here. Mostly we will be adding here all the amendments material. So here you download. What are the amendments material that you need to download? 1. Institute has given amendments book, no? That you need to download with you. And 2, we have an amendments material for peer review. So we have an amendments material for peer review that you need to download. And we have our main material, which is module 1. Inside that ethics chapter is there. Inside that Noclar provision is clearly discussed somewhere at question number 4. It's actually question number 4. So these are the things which I have covered in this amendments. And for Nbfc audit, I refer my Nbfc material module 2 that is covered in module 2. Getting it? Nbfc audit. So that module 2 along with institute amendments book I have covered. Getting it? So these are the sources which I have used for covering this amendments lecture. Now when you're watching marathon, I clearly explained at the beginning of the marathon what are the resources that I have covered. Okay, that's it. Take care. All the best. Continue watching the amendments. Yes. So we'll continue the audit of Nbfc. After this, I will start insurance audit, then CFS audit. Then I'll come back to standards on auditing and ethics. Then after that, audit committee fiscal loss will discuss. Okay. Almost till now we have completed. Easily I can tell you audit report 12 standards, no, they'll have a weightage of 10 to 15 marks. With CARO altogether, minimum 15 marks it will be. Then peer review, qual review, some another 10 marks. So 25 marks is completed. Getting it? And now we are discussing Nbfc, hardly 1.5 hour. Another 5 marks. Easily we can complete. Okay. And insurance audit is another 6 to 8 marks. So with MCQs all put together, it will be minimum 6 for sure. Then CFS audit. Today we will try to complete all this. Okay. Now, so tomorrow again, once in the next session, no, once we start standards and ethics, no, again we will be completing another 30 marks portion, 30 to 35 marks portion. Now, so write about audit of NBFCs. See here, with respect to this chapter, we are having some amendments. Like before I proceed further, how many of you have read this chapter earlier? Thoroughly, once, at least once, understood? Thoroughly you have understood NBFC audit chapter? Yes. Like how many of you have never seen this? Like exactly, correctly tell me how many of you have not gone through this? Okay, fine, very few. But believe me, this is very easy chapter. Very small and easy. 5 marks you can easily score. Okay. Now, see in NBFC, first of all, NBFC is an activity. NBFC is an activity. When an enterprise is treated as NBFC, if it satisfies a principal business criteria, what is it called as? Principal business criteria. Suppose if the principal business is agriculture activity, industrial activity, trading activity, or immovable property activity, then you are not treated as an NBFC. You are not treated as NBFC. That is excluded from the definition of NBFC. If an enterprise or if a company whose principal activity is this, it is not to be treated as NBFC at all. Suppose if your principal activity, principal business is financing activities, getting it? Then you are treated as NBFC. What do you mean by financing activities? They have given 2 criteria and both must be satisfied. It's plus, nothing but end. One is financial asset criteria. Another one, financial income criteria. One is financial asset criteria. Another one, financial income criteria. If the financial assets are more than or equal to 50% of the total assets, if the financial income is more than or equal to 50% of the total income, if the total income of a particular enterprise you take, in their total income, what is the income that is coming from financial assets? Financial income means what? Income from financial assets. If income is generated from the financial assets, then we call it as financial income. Getting it? If the financial income is more than 50%, getting it, of the total income of that particular enterprise, then financial income criteria is satisfied. Out of the total assets of that enterprise, if financial assets are more than 50%, getting the point, then financial asset criteria is also satisfied. If both the conditions are satisfied, it's end. Remember, if both are satisfied, then principal business criteria is satisfied by that entity, so that it is now treated as an NBFC. It is now treated as NBFC. Between banks and NBFC, there is only one difference. NBFC cannot accept demand deposits. That's the only difference. And NBFC depositors will not have the insurance protection. Getting it? There is a government guaranteed insurance, some program is there, where in respect of bank, if a bank default up to 5 lakhs for you, insurance is there. But for NBFC deposits, you don't have that insurance facility. Deposit credit guarantee insurance scheme, we call it as. Able to understand? Now, you see now, there is a bank, very recently last month, Silicon Valley Bank case has come. Now there is a Bank of Swiss. It's not SWI, SUISSE. Getting it? Which is a Switzerland second largest bank. So it is about to default. Last year their share price was, let us assume 100 rupees, today it is 1 rupee. 99% decline in the market value of the share. Getting it? They used to say, like credit rate swap something, where you take insurance against default. Getting it? The insurance premium has gone up 40% of the debt. Where the insurance premium gone up 40% of the debt. All this is happening. See, one of the important drawback in that, Bank of Swiss is they don't follow Basel III norms. Getting it? Whereas all NBFCs in India, all banks in India, we follow Basel III norms, income recognition, prudential norms, all that. That is one advantage why Indian economy is still stable in spite of repeated attacks on India. In terms of whatever it is, COVID or worldwide crisis or recession, whatever, still Indian economy is stable only because of the rigid financial structure in India. Getting the point? The RBI policies, everything were very, very, very prudent compared to any other banking system in the world. Even the US banks are risky. Swiss bank is like world of banker. It's a banker to the world, I can say. Switzerland is a banker to the world. In fact, we see, Basel 3 norms. Basel means it's a city. It's a city in the Switzerland. It's a city name. Inside that city, there is a committee formed. That committee is called as Basel Committee for Banking Systems, Banking Supervision. And that committee only formulated all the norms, prudential norms, all that. Anyhow, that we will discuss in bank audit. Able to understand? So, the financial institutions has to be regulated very strongly. And when an institution is called as a financial institution, if predominant operations are financial activities, it's a financial institution. When predominant operations are financial affairs, public money is being invested on financial affairs, it has to be regulated. And that's why, if at all your principal business is finance activity, you will come under the RBI radar. Are you getting the point? So that is the reason why they defined this criteria. If your principal activity is not financial activity, you may not come under this particular thing. Insurance company is basically an NBFC. Chit fund company, basically an NBFC. Nidhi company, basically an NBFC. Housing finance company, microfinance institution, all these institutions are NBFCs only. But they are exempted from registration. They are exempted from registrations. You have a question on this, no? See here. Now you see here, there are some NBFCs which are exempted. You can see here. These are the NBFCs which are exempted from registration. Yes or no? So, they will ask you this question straight away. What are the NBFCs which are exempted from registration? Logically, they all satisfy NBFC criteria. Stockbrokers also satisfy NBFC criteria. What is financial asset? Investments, loans and advances, deposits. These are all financial assets. Getting the point? Non-financial assets means what? Plant and machinery, inventory, all these are non-financial. Again, cash and bank balance is also financial asset. If the financial assets are more than 50% of your total assets, and income from the financial assets is what? Major income for you in the profit and loss account, then you are treated as financial institution and you are liable for NBFC registration if at all you are not subjected to bank regulations. Are you getting the point? Now, these all entities are financial institutions basically, but they are exempted from NBFC registration because for them there is a separate regulatory which is monitoring them. Some regulatory, either suppose you say Nidhi companies, Ministry of Corporate Affairs is directly regulating. Chit fund, Ministry of Corporate Affairs is directly regulating. Housing finance companies, National Housing Bank is regulating. Able to understand? So there are many institutions. Insurance companies, IRDA is regulating. Since multiple regulatories exposure, multiple regulatories monitoring should be avoided. For that reason, these lists were exempted by RBI. Means on these entities, RBI will not control. Some other regulators, they will have a control. Are you getting the point? Now you see in this, there is one clarification you need to have. Now core investment company. What is it? Core investment company. First of all, there are various types of NBFCs. Investment credit company, infrastructure finance company, systematically important core investment, infrastructure debt, NBFC microfinance, NBFC factors, NBFC non-operative financial holding companies, NBFC peer-to-peer lending, NBFC aggregator, which are newly introduced. Getting the point? I'll discuss, don't worry. Now, see, NBFCs are broadly classified into, first of all, in this chapter, one confusion that we all have is regarding the directions. Whenever the directions word came, students confuse a lot. Like what is that? There are some directions. NBFC, non-systematically important, non-deposit taking, Reserve Bank, directions 2015 or 16, some number. Okay, 2015 or 16. NBFC, systematically important, non-deposit taking and deposit taking, Reserve Bank, directions 2015. NBFC, acceptance of public deposits, Reserve Bank, directions 2015. NBFC, auditors reports, Reserve Bank, directions 2015. Are you getting the point? These are the four set of directions. These are the four set of directions which you will come across in this chapter. Now you see, this is non-systematically important, non-deposit taking directions. Now first of all, NBFCs are based on what they are doing. they were classified as deposit taking NBFC, non-deposit taking NBFCs based on what they are doing. Deposit taking means they take deposits and lend it to the public. But demand deposits is prohibited. Demand deposit means you and me have bank accounts, right, savings accounts, where we can use phone pay, Google Pay, whenever we want we can withdraw. Whenever we don't need, we just keep funds in that. That is demand deposit. Whenever I want, I can withdraw. That is demand. NBFC cannot offer that a kind of facility, but NBFC can accept term deposits if they have a license for that from RBI. Getting it? Now, these non-deposit taking NBFCs are further classified into systematically important, non-systematically important. When do we say systematically important? If the asset size is 500 crore, if the asset size is 500 crore and above, then we call them as NBFC, which is systematically important. Means in the system it is very important. You have to regulate it well. Whereas if the NBFC whose total assets do not exceed, I think it's less than 500 crore, less than a do not exceed that you see. Okay, I am not here for that. So less than 500 crore, then we call it as what? Non-systematically important NBFC. What is it called as? Non-systematically important. Now, for all non-systematically important non-deposit taking, we have a direction. For all systematically important deposit taking, because these are very important, we have second directions. Are you getting the point? Now you take Muthoot Finance. Muthoot Finance falls under second entity. It is a systematically important non-deposit taking NBFC. Muthoot Finance. Getting the point? It's a non-deposit taking NBFC, systematically important NBFC, because Muthoot Finance assets are more than 15,000 crore. Able to understand? So it's a systematically important. But are they taking deposits? No, they are non-deposit taking. How do I know Muthoot Finance is non-deposit taking? Because in the board report or somewhere they clearly mentioned, board of directors have taken a resolution that the company will not accept any deposits. This condition is there for which companies? Non-deposit taking NBFCs. Are you getting the point? Then if NBFC is accepting public deposits also, public deposits means 73 section public deposits under Companies Act, chapter 5 regulations of Companies Act. So then we call, then for that NBFC, this direction also will apply. These directions will apply. If at all you are not accepting any public deposits, these directions will not apply. In these directions only, we will come across in this chapter that list credit rating, downgrading in credit rating, what to do if there is a downgrading in credit rating, quarterly returns to be filed with RBI with respect to deposits accepted. All these points will come in this directions question only. Are you getting it? Now, one topic in this entire chapter which is again difficult is NBFC audit report directions. Like the auditors of an NBFC has to give a special report to RBI, that's called exception report. And auditors of the NBFC has to give a special report to board of directors. What the audit report should contain? While they are giving, not audit report means not report on the financial statements. I am talking about special report to board. What are the contents of the auditor's report given to board of directors? For NBFC accepting public deposits, the contents are different. NBFC accepting not accepting deposit but systematically important, contents are different. NBFC non-systematically important, in that the auditors reported to board, contents are again different. Are you getting it? So that question where students generally confuse. Are you clear until now? Now recent amendment is what? NBFC's classification. Earlier NBFCs are classified in the manner what I told here, but now this NBFC classification is not based on the activity, but based on the category. What is it? Based on the category they have classified. Like NBFC base layer, NBFC middle layer, NBFC upper layer, NBFC top layer. Top layer is actually zero. Nothing will be there inside this. RBI will pick. Which NBFC comes under top layer? RBI will pick. Getting it? Base layer means all NBFCs which are non-systematically important, non-deposit taking NBFCs, they all straight away come under which layer? Base layer. Getting it? Now NBFCs which are systematically important, non-deposit taking, which are systematically important, non-deposit taking, and NBFCs which are accepting public deposits, both of them will come under either middle layer or upper layer. They have given a scorecard approach. If a particular NBFC is satisfying so and so score, like AQMM scoring is there, no, similar to that here also there is a scorecard benchmarking approach is given. If a particular NBFC satisfies that benchmark, they will come directly under upper layer. Otherwise, it is middle layer. Are you getting the point? All of you. So, NBFC, whether it will come under middle layer or upper layer, it again depends on another criteria called benchmarking scores. Benchmark scores. Are you getting it? Now, which NBFCs come under top layer? 0. RBI will handpick them. Getting it? Considering the risk involved in that NBFC's operations, all that, RBI. If at all an NBFC comes under top layer, it is under the direct monitoring of RBI. Every activity will be under direct monitoring of RBI. Top layer means risky NBFCs will come there. Are you getting the point? All of you. Now, which NBFCs will come in top layer is generally, according to me, those NBFCs where capital adequacy is not sufficient. We all know that NBFCs have to maintain a capital adequacy ratio of 15% of risk-weighted, aggregate of risk-weighted assets and off the balance sheet items. Able to understand? Now, this is applicable for all NBFCs other than non-system, other than base layer. Now onwards, I will discuss base layer, middle layer. I hope first you understand. Like once again, I'll see. NBFC, if at all you are non-deposit taking, non-systematically important. You are not systematically important and non-deposit taking. All these NBFCs come under base layer. Suppose you are non-deposit taking but systematically important, or you are deposit taking NBFC. You are deposit taking NBFC. You may either fall under middle layer or upper layer depending upon the score. Benchmark scores. Top layer, we don't need to discuss also because it's something RBI will take care. Are you clear? Now, all NBFCs that fall under base layer, they just have to satisfy net owned funds criteria of 2 crore. We all know NBFC has to maintain a net owned fund of 2 crore. And you know, this net owned fund of 2 crore is gradually increased to 5 crore, which will be increased to 10 crore by 2027. Getting the point? This net owned fund is going to be increased to 5 crore by 25. Again, it is going to be increased to 10 crore by 27. That is not now, but right now it is 2 crore applicable. So NBFC, in order to start an NBFC, your net owned funds must be minimum 2 crore. They represent it as 200 lakhs. Or original limit is 25 lakhs, later extended to 200 lakhs, nothing but 2 crore. Now, NBFCs fall under middle layer and upper layer. Net owned funds criteria will not apply. For them, which criteria will apply? Capital requirement adequacy ratio criteria will apply. As per that, for them, we can't fix it with this much amount you have to maintain. What is net owned funds? Minimum your own capital. How much you are bringing? Tell me first. Before take from public, how much you are bringing? That is important. So, what are they saying? If an NBFC falling under middle layer or if an NBFC falling under upper layer, they must maintain 15% of aggregate of risk-adjusted assets and off the balance sheet items. Risk-adjusted assets and off the balance sheet items. Off the balance sheet items means contingencies, all that. Are you getting the point? So, this is the minimum capital you must maintain. So capital 15%. Now this 15% again has been subdivided into 2 parts. Tier 1 capital, Tier 2 capital. Tier 1 capital should be minimum 10 out of that. Tier 2 capital maximum 5. You know, Muthoot Finance has maintained 27% ratio. What is the Muthoot Finance capital requirement ratio? 27. Logically, how much is enough? 15%. But Muthoot Finance maintain not even 27, I think 29%. And you know what is Tier 2 capital of Muthoot Finance? Maximum is 5. Maximum is what? 5. But Muthoot Finance has just bare 0.1%. What is it? 0.1. 28.9% is Tier 1 capital. 0.1% is only Tier 2 capital of Muthoot Finance. So, Tier 2 capital is very, very negligible. Tier 2 capital means subordinate debt, all that they will be coming. 81 bonds, subordinate debts, those bonds where, you know, they have issued which are having least priority. Are you getting the point? At the time of default, getting it? So, those all comes under Tier 2 capital. Are you getting it? So, Tier 1 capital should be minimum 10. And suppose if the NBFC is engaged in lending against gold jewelry, getting it? Tier 1 must be minimum 12. In such case, maximum Tier 2 can be 3. Are you getting the point? All of you. So, out of the minimum 15, 12 in case of lending against gold. For normal NBFCs, it is 10. So, this is capital requirement adequacy ratio for NBFC. One topic is completed. Are you clear? Principal business criteria topic is also completed. Now, you see, now we'll go in a particular order now. So first of all, NBFC is a financial institution, which is a company whose principal business is receiving deposits under any scheme or arrangement. It doesn't matter whether you're receiving as a a security deposit in respect of a construction contract. That doesn't matter. Any scheme, any arrangement, you're receiving deposit. That's it. What we see is, are you receiving deposit or such other banking institution or class of institution which government may specify. What is principal business activity? Where more than 50%, equal to is not there, more than 50%. Okay, financial assets are significant, major portion of financial assets, major income is financial income. Both the conditions are to be satisfied. Now, those enterprises which satisfy that condition, they must register with RBI under 45 IA. Getting it? Under 45 IA. In RBI Act, there is a one chapter. That entire chapter is dedicated for NBFCs, and that chapter starts with section 45. Are you getting the point? And they must have certificate of registration. Their net owned funds must be minimum 2 crore. Further, now, like, what is it mean by RBI regulating these NBFCs? RBI will regulate by issuing them directions. What directions? Deposits acceptance direction, prudential norms directions, IRAC. We call this as IRAC norms, income recognition, asset classification norms directions, PBD norms directions, risk exposure norms, other measures, and how these NBFCs has to report. Everything is being monitored by RBI. So, if your enterprise is satisfying principal business criteria, you are directly liable for registration with RBI, where you are monitored on all these aspects by RBI. Correct? Able to recollect? Next. Same way, RBI has also issued directions to auditors. As per that directions, auditors have to prepare exception report to RBI. Auditors have to give a report to board of directors, in addition to auditors report to the members of the company. Audit report to members of the company we have seen in audit report chapter. But audit report to board of directors of NBFC, audit report to RBI exception report, that is given under directions of auditors. So NBFC audit report directions, Reserve Bank 2015. So as per that directions, auditor has to give 2 reports, one to the board of directors, 2 to the RBI. To RBI, whatever we present, we call it as exception report. Able to understand? I'll discuss all that. Next, what are various types of NBFCs? NBFC may be involved in loans and advances, assets, acquisition of share, leasing, hire purchase, insurance, ship business, anything. All these activities come under NBFC, but does not include agriculture, industrial, trading, immovable property. If you are dealing in immovable property, or if you are dealing in goods and services, or if you are doing predominantly agriculture or predominantly industrial manufacturing activity, then you are not treated as NBFC. By the way, remember, this should be principal business for you. Suppose you are doing manufacturing, but if you look at profit and loss account, major income is from financial assets. If I look at your balance sheet, major assets are financial assets. You are having plant and machinery, you are manufacturing, but major assets are financial assets. Then you are treated as what again? NBFC. Are you getting the point? Here you see, whose principal business is this? This point need not be explained also. Are you getting the point? Next. So NBFCs are classified as deposit taking, non-deposit taking. Non-deposit taking are subclassified as systematically important, non-systematically important. Now this classification has been changed to base layer, middle layer, upper layer. That is what the amendment. Are you clear? Now, what are the NBFCs that are exempted? I spoke just. What is the difference between NBFC and bank? NBFC cannot accept demand deposit. They are not forming part of payment and settlement system. Nothing but, you see, now when you are making any purchase on online, Razorpay is acting. HDFC Bank is acting. Getting the point? These are all payment gateways. Getting the point? NBFC will not be part of payment gateway system. Simple. They cannot do that. Where payment gateways will get some commission. Getting it? NBFC cannot participate like that. Next. Deposit insurance facility is not available for the depositors of NBFC, and there is no such requirement of NBFC must give minimum loan to priority sector. Priority sector means agriculture, MSMEs, all that. Getting it? Sick industries. Getting it? All these are called as priority sector. Banks must lend a certain amount to priority sector for sure. Getting it? Housing loans is a priority sector. Next. What is capital requirement ratio? 15% of the aggregate of risk-weighted assets on the balance sheet and risk-adjusted value of the balance sheet. Minimum tier 1 should be 10%. Lending against gold, minimum tier 1 should be 12%. Getting it? These NBFCs, no. These NBFCs, which NBFCs? Capital requirement ratio will apply middle layer NBFC, upper layer NBFC. NBFCs which fall under, base layer, no. Base layer. For them, net owned funds criteria only will apply. Please substitute the words. Now onwards, don't interpret non-systematically important, non-deposit taking. No, don't use. Directly use base layer. Whenever the word systematically important but not deposit taking or deposit taking, simply use middle layer or upper layer as the case may be. That's it. Are you clear? So, these are the risk values. You need not remember in exam if they want to give a question on this, they will give you. They will give you the percentages also and the asset also. Asset value will be there, percentage will be there. Apply that, you will get the risk value, risk adjusted value. Total that, on that apply 15%. That's it. Next. So then we have asset classification, all that. We'll take a break and get back and discuss. So now let's continue the NBFC IRAC norms, income recognition asset classification norms. The first thing that we need to understand is NPA norm for NBFC. Now, this NBFC NPA norm is different for base layer, different for middle layer and upper layer. The NBFC norms are different for base layer. See, I am using the language directly in the amended language. Directly. Getting it? Now, base layer means non-deposit, non-systematically important. Whereas, systematically important NBFCs and the deposit taking NBFCs, they come under middle layer and upper layer. For all of these systematically important NBFCs, NBFC norm is 3 months directly. What is the NBFC norm? 3 months directly. Remember? Earlier you might have seen for systematical NBFCs and deposit taking NBFCs, as per the directions given by them, 3 months is to be substituted for 6 months. You can see here. First, let us understand what is a non-performing asset for an NBFC. It may be an asset, it may be a term loan, it may be a demand loan, it may be a bill, or it may be any interest in respect of a debt or income on receivables, or even if you sell any asset, no. If you sell any asset or render any service, no, where reimbursement of expenses, whatever is there, no, even if it is overdue for 6 months or more, in all these cases, you see it is 6 months or more, 6 months or more. Are you getting the point? In all these cases, the criteria to decide NPA is 6 months or more. However, if the NBFC is systematically important, deposit taking, nothing but middle layer and upper layer, for them, you need to substitute it with 3 months. Sorry, not this. You need to substitute with 3 months, this one. You need to substitute with 3 months. Now, wherever NBFC, systematically important non-deposit taking and deposit taking directions, as per the directions, for those NBFCs which fall under middle layer and upper layer, for them, 3 months is to be treated. In all the A to and F above points, 6 months word is used, right? Now, that has to be substituted with 3 months, which is in line with the banking items, banking companies. For banking companies, 90 days is what we use. Here we use 3 months. Don't substitute. Because month definition is different, days definition is different. Next. For NBFCs, which are engaged in leasing and hire purchase business. Getting the point? For them, 12 months is the criteria. However, for again, middle layer and upper layer NBFCs, again it is 3 months. For all middle layer NBFCs, upper layer NBFCs, if they have to receive anything which is receivable, if the receivable is not received on due date and the overdue period is 3 months or more than 3 months, it is straight away to be treated as NPA. Are you getting the point? All of you. For normal NBFCs, all types of receivables except lease rentals, except hire purchase installment, all other receivables for a normal base layer NBFC, 6 months is the criteria. For lease rentals, for a base layer NBFC, what is the criteria? 12 months. So NBFC, this is important. NPA norm is important for this one MCQ questions. Getting it? NPA. Okay, base layer NBFC, middle layer, upper layer NBFC. Always 3 months. What is the criteria? Always 3 months for all kinds of receivable. Whether you call it as interest on security, whether you call it as dividend, whether you call it as sale proceeds on sale of fixed asset. Getting it? Or it may be a term loan principal interest or installment, or it may be call money, or it may be bill discounted money, whatever loan, whatever advance, NBFC has to receive something. And there is a due date for that. After due date, it crossed, it's called overdue. If the overdue period is 3 months or more, it's straight away NPA. Are you getting the point? Now for base layer NBFCs, what is the receivable? You need to check. If the receivable is lease rental or hire purchase installment, then it is 12 months. Other receivables, then it is 6 months. This is a simple NPA now. No need to mug up. Easy account. All of you? That's it. Now you see. So that is NPA now. Now once an NBFC, see what is the significance of NPA first of all. Once a receivable is treated as NPA, we have to classify that asset as non-performing asset and provisioning norms will apply. One consequence of treating an asset item as NPA is what? Provisioning norms will apply. Before we create provision, NPAs are subclassified into 3 more types. NPAs are again subclassified into 3 more types. One is substandard asset, doubtful asset, loss asset. Substandard, doubtful and loss asset. When an NPA is treated as substandard asset, once it turns into NPA, when it will turn into NPA? For base layer, 12 months or 6 months, overdue should cross. Then it will become NPA. Primarily, it will directly go under substandard category. For a upper layer, middle layer, just 3 months overdue enough. Immediately 91st day or 92nd day, whatever, 3 months expiry date, whatever is there, immediately it will be turned into NPA substandard asset. Now, for how long we will carry it under substandard category? How long we will carry that under substandard category? For base layer, we will carry it up to 18 months. For middle layer and upper layer, we will carry it up to 12 months. Are you getting the point? Sir, it already crossed 3 months. 18 months also completed. 18 months also completed. Then the next 18 months, we will be classifying it as doubtful asset. Whereas here, next 12 months, we will classify it as doubtful asset. After completion of initial 12 months, next 12 months, we will treat it as doubtful asset. Here, in case of, this is for base layer, this is for upper layer or middle layer. Able to understand? Which means, suppose I am an NBFC which fall under base layer. First, overdue for more than 6 months or more than 12 months. If it is there, yes, we will straight away treat it as NPA. For how many months we will treat it as NPA? Up to 18 months substandard. After 18 months, it will become as doubtful. That's it. If at all company identified this is something irrecoverable at all, then they will classify that as a loss asset. Loss asset, no time. Getting it? Company will classify. Suppose if the same thing is middle layer or upper layer, what is the consequence? Here we will use 3 months criteria. Here we will use which criteria? 12 months. After 12 months, it will become doubtful asset. Exactly same logic. Just that the number will be different. Are you getting the point? All of you. Now, for substandard assets, for doubtful assets, for loss asset, for standard asset, how much provision we need to create is the question. Getting it? Now, generally, for standard assets, we are not supposed to maintain any provision. But here they have given a slight, very nominal provision we are maintaining. For base layer NBFCs and middle layer NBFCs, there is a nominal provision. For base layer NBFC, 0.25% of the outstanding amount. Which standard means what? Which is not NPA. Which is not NPA. So, in respect of performing asset, standard asset also we have to create provision. But very, very, very nominal amount. How much? 0.25%. Suppose if it is a middle layer, upper layer NBFC, 0.4%. Are you getting it? Now, suppose, sir, it's turned into NPA. Right now, it is under substandard category. Straight away, 10% of outstanding loan shall be treated as a provision. How much is? 10% of the outstanding loan. You can see here. You can observe the provisioning norms here. For standard assets, how much? For substandard asset, how much it is? 10% of the total outstanding. Suppose if the asset is turning into doubtful, then we need to increase the provision. Substandard already 10 we maintain, no? Now it turned into doubtful. Then we need to increase the provision until next 1 year up to 20%. That next year we need to increase by another 30%. That next year we increase by totally 50, making it as a whole 100% provision by end of 3 years. See, first 12, let us talk about base layer NBFC. Overdue for more than 6 months. Substandard. Under substandard category, keep 10% for next 18 months provision. For next 18 months under substandard category, as long as it continued, outstanding loan multiplied by how much provision? 10%. Now after 18 months, it turns into doubtful, right? Now, once it turned into doubtful, let us classify it as doubtful up to 1 year, doubtful up to 3 years, doubtful more than 3 years. Suppose up to 1 year after it turned into doubtful, total provision we should maintain how much? 20. Already 10 is created, only 10 we have to create. Next, up to next 3 years, additional 30 we need to add. Now total provision came how much? 50%. 3 years also crossed. 50, another 50 we have to create. We have to be more conservative, making it once an asset classified as doubtful and exceeded 3 years after classifying, 100% provisioning is required. Sir, instead of creating 100% provision, we can write it off. No, depends on the bank's policy. Sorry, depends upon the NBFC policy. Recovery agent's response based on so many things. See, once an asset turns into NPA, recovery agency work will start. Getting it? So finally, they will give a report. Recovery agents, bad banks. Getting it? Asset reconstruction companies, all that they will be entering into this. Getting it? So they will decide ultimately at the end of 3 years. So sir, 3 years already crossed. We tried all our routes. Nothing can be recovered from the person except to bring him to the insolvency proceedings. Then we will classify it as a loss asset 100%. Then we will file a case against him. Of course, case will be filed the moment he started default. The moment he started default, we will try to initiate recovery against him. If at all he is not responding, we will file a case against him. So all the proceedings will be happening. After 3 years, irrespective of the status of the court case, we will straight away write it off. Generally, what practice banks will follow? Write off. Able to understand. Now remember, write off is different from waiver. Getting it? See, many banks and all, NBFCs, they write off the amounts, right? So people, unnecessarily newspapers, media people and all will be commenting unnecessarily. Government is writing off loans given to so-and-so company. So public money is, write-off means what? It's a prudential law. People don't understand. Write-off is not waiver. They think when we write off in books of accounts, we are waiving the person. No. Able to understand. Still the recovery proceedings against Nirav Modi is active. Still the recovery proceedings against the Vijay Mallya is active. All this, whoever have absconded from India, the recovery proceedings are still going on. The cases are pending in international courts. Able to understand. Next. So this is regarding NPA norm and provisioning norm. Are you clear? So I have even covered, when it will be treated as, see, entire this content I have covered in the form of simple diagram. Getting it? So, asset classification. For NBFCs, we classify assets into 4 categories: standard, substandard, doubtful, and assets. Standard is actually called as performing assets. All these 3 are nothing but non-performing assets. Getting it? Now, sir, suppose if an asset is classified as substandard, can I again bring it back to performing asset category? There is some upgradation criteria. Upgradation criteria. Only if the conditions given under upgradation criteria is satisfied, only then we can. If at all rescheduling is done, we cannot classify until 1 year of satisfactory performance. What is it? Until 1 year of satisfactory performance as per the rescheduled terms, we will not upgrade it. Getting it? So substandard up to 18 months after NPA for base layer. If the same number is what? 12 months for middle and upper layer. Here they will tell, here they will mention that non-systematically important, non-deposit, nothing but which layer? Base layer. For remaining it is which one? Middle layer and upper layer. That's it. Suppose where terms of the agreement, no, where they were renegotiated or rescheduled or restructured, then until 1 year of satisfactory performance as per the renegotiated terms, you cannot upgrade. Are you getting it? For the doubtful asset. Doubtful asset means what? Generally, after 18 months. Once an asset is continued in substandard category for 18 months, it is substandard. Once it crosses 18 months, we have to reclassify that as doubtful. Whereas in case of middle layer and upper layer, we don't wait 18 months. We just wait for 12 months and classify. And loss asset. Loss asset means which is identified by the NBFC management, internal or external auditor, or by the bank during inspection. Then we will treat it as loss asset and it will be written off completely. And there is another reason why loss asset will be created. An asset which is adversely affected by threat of non-recoverability due to either erosion in the value of security or non-availability of security due to fraudulent act of omission on the part of the borrower. This is also treated as loss asset. This is very important observation. Now you see here it is not about non-repayment. Here it is not about non-repayment. Customer is repaying me honestly, timely. But the problem is, we gave a loan to the customer based on security. And the security value has eroded completely. So there is a threat of non-recoverability in future. There is a threat. Generally, if a customer do not see, banks will give loan based on two reasons. One is your repayment capacity, to another security. 90% of the loans given by the banks are secured. But you may understand, now when the loans are secured, no, if a customer default, we can sell the security and do right. The problem is, when security is being valued at the time of giving loan, frauds are happening. Getting the point? That is where the problem is. And most of the security, suppose you see Vijay Mallya has given enough security for taking the loan. The airplanes were there as security for the bank, but the problem is nobody is ready to buy. That is the problem. But finding a buyer is what, important for the security. How liquid the security given by the customer is more important. Getting it? So if at all any security given by the customer has become, there's an erosion in the value. There's an erosion in the value when security has lost its market value, or security is not available. The customer has fraudulently showed security, which is actually not there in reality. So in such a case, irrespective of default, we will straight away treat it as what? Loss asset. We will straight away treat it as loss asset. This is there in banking also. This provision is there in banking. In fact, this is taken from the banking provision. Erosion in value of security, where value of security is not even 10% of the outstanding loan of the customer. To the borrower, there is an outstanding loan from the borrower. Not even 10% of the loan, the security market value is there. In such a case, whether he is repaying regularly or not, ignore the fact. Write it off as a loss asset. This is a banking no. Are you getting the point? So, in question, no. If they'll ask you, write about loss asset within the definition of NBFC. So, loss asset means two criteria. One, the auditors and the bank inspection will identify whether it's a loss asset or not. Two, security erosion, value erosion. Then also we will treat it as loss asset. Same way, doubtful asset. You see, substandard asset. Substandard assets, we have two categories. Substandard assets, we have two categories. One category, customer defaulted. More than 6 months or more than 3 months, depending upon base layer, middle layer. Next 18 months or next 12 months, we will treat it as doubtful. That is one category because of the default. Suppose, I am repaying regularly. Suddenly my job has gone. Getting it? So immediately I went to the bank without even default. Without even default, I went to the bank. Sir, please apply rescheduling. Suddenly, all these days customer is paying on time. He came for reschedulement or extension of the loan period, whatever. Okay, definitely it's a threat of non-recoverability. Yes or no? It's a risk, right? So banks, even though he is repaying regularly, he just asked for rescheduling. Sir, next 6 months I cannot pay. I have not defaulted. Remember, I have not defaulted. I am asking the bank to give me additional credit period for another 6 months. Able to understand? In that case, all these loans wherever customer made an application for reschedulement, made an application for extension, getting it or renewal, for next 1 year, we will straight away classify it as doubtful category. Even though customer has paid promptly, even though there is no default. So in examination, they'll ask you a question. Write about Nbfc substandard asset. Two categories will be substandard. One, there is a default. Here, an asset comes under substandard category through default route. Another asset will come from rescheduling route. So once a customer applied for reschedulement, even though there is no default, bank agreed for rescheduling. So customer has not defaulted, but in the bank records, bank has to classify it as substandard and make a provision because customer asked for reschedulement is a potential threat of non-recoverability at a future date. Are you getting the point? So that is second criteria. This many don't observe. Able to understand all of you? MCQ is important. MCQ is important. They'll give you option A, option B, option A or B, option A and B like that. Are you clear? Next. Actually, the answer is A or B, any of these two cases. If any of these two cases attract, it is a doubtful asset. Sorry, substandard asset. And for doubtful asset is very simple. Once it classified as substandard and continued for more than 12 months and continued for more than 18 months, 18 or 12 crossed, immediately it is doubtful. Now, by the way, I told right rescheduling part, substandard rescheduling part. Until 1 year of satisfactory performance, even the customer is paying promptly as per the rescheduled terms. Until 1 year, we'll wait. Okay, let us see whether as per the rescheduled terms, customer is paying for the next 1 year. Okay, customer is paying, then I will upgrade it. Then I will again upgrade the customer account in my books of accounts to performing asset category. Are you clear? Next. So that is the NBFC norm here. So in examination MCQs, they may be asking you a provision. Case-based MCQ will be given for you to calculate the provision amount. To calculate provision amount. Now for standard set, what is the provisioning? For middle layer and upper layer, 0.4%. For non-systematically important, nothing but base layer, 0.25% of the outstanding amount. Next. What are the steps involved in audit of NBFC? Obviously, similar steps like any other audit of a company. First, we understand about the business of the company. We look at MOA, AOA, we look at business policy, we look at minutes. Yes or no? What actual business they are doing. We apply principal business criteria, all that. Getting it? Remember, in CARO of every company, for every company wherever CARO is applicable, we need to check whether NBFC activity is carried on by the company. Principal business criteria we need to apply for every company. If a company satisfies that criteria, they have to obtain compulsory registration of RBI. If they do not obtain registration, we need to qualify the CARO report. Are you getting it? Next, we generally look at internal control systems. Then most important thing is registration with RBI we need to check. Okay, we have to check the registration copy and see the principal business criteria, dual condition, financial asset criteria, financial income criteria satisfied or not. Then we need to check mandatory investment in liquid assets. This point is applicable only for those NBFCs which are accepting deposits. Only if I accept deposits of a customer, I need to maintain liquidity position. Because when a customer comes back and take back his deposits by surrendering the bond, when he want to take back, I don't know. So I need to maintain liquidity. This is similar to SLR CRR requirement in case of a bank. In a bank, CRR SLR is there. For NBFC, CRR SLR does not apply, no. So they need to maintain investment in liquid assets as given by RBI. And further, they need to file quarterly returns. And auditor should ascertain whether the returns were regularly filed with RBI by the concerned NBFC or not. We need to check. Now, step number 4. We need to check certain directions issued by RBI for middle layer, upper layer NBFCs. For middle layer and upper layer NBFCs which are accepting deposits, auditor has to check certain points. What are the points? Whether the NBFC has accepted deposits based on appropriate credit rating allocated to them. See, credit rating agencies will give some rating to you. Ratings will be in, it may be numbers or it may be A plus, that category, or depends. There are many credit rating companies that are there in India which are approved credit rating institution. Each credit rating company will follow one grading system. So, as per the grading system, you cannot accept more than so and so amount of deposits. Based on the credit rating, what is the quantum of deposit I can accept from public? Remember, this is similar for companies also. Suppose if a company want to go for public deposits, acceptance of public deposits, first they need to get a grading certificate. Based on the credit rating grading, the quantum of deposit they can accept from public will be decided. And within that amount only you can raise money from the public. Same way for NBFC also. Now, you see, whenever there is an upgrading of the credit rating, nothing. If you want, you can raise additional deposit. But whenever there is a downgrading, whatever the deposits that you have accepted, no. Downgrading happened. After you accepted the deposit, there is a downgrading. You should not renew. Like there is a question here. This itself can be asked as a 4 marks question. They'll give you a practical question. You are appointed as an auditor of an NBFC. Getting it? During the audit, you found that the NBFC has accepted certain public deposits. At the time of accepting the public deposits, there was a credit rating given by some credit rating agency, approved credit rating institution in India. And thereafter, after periodical credit rating inspection, there was a downgrading in the credit rating. What as an auditor you evaluate when there is a downgrading in the credit rating of the NBFC? This is a question they will ask you. Nothing but you just have to write this point as an answer. 4 marks question. Getting the point. So what you need to write? When there is a downgrading in credit rating, should I repay to the customer? No need. Don't accept further deposits. First point. 2. If a customer deposit is expired, no, don't renew. Don't renew because you are a downgrading. You need to repay. Logically speaking, you need to repay. But we are not asking you to repay. We are asking you not to renew. Not to renew means what? Maturity over, now repay. In fact, suddenly because of downgrading, don't repay all the amounts. Before maturity, no need to repay. On maturity, you have to repay. no need to renew. And existing deposits, whatever is there, you can continue up to maturity date. Are you getting the point? Suppose if any customer want to renew, give the customer complete information that there is a downgrading. As per what is meant by downgrading, we as per our liquidity norms should not accept. If at all you are willing still to invest in our company in the form of deposit, give your 100% consent, then I will accept renewal. So you see, no matured public deposits shall be renewed without express and voluntary consent of the depositor. Only if the depositor 100% agreed, yes, I am ready to bear the risk, then only he can accept. Then only that application can be renewed. Otherwise, if I do not intimate the depositor, getting it, about the downgrading, I should not renew the application normally. Generally, whenever company accept a deposits, no, whenever NBFC accept a deposits, no, it can be renewed. Whenever maturity date comes, it can be renewed. Are you getting the point? So, in the event of downgrading, below minimum specified investment grade, NBFC, especially ICC, which NBFC? Investment and credit company or a factor, okay, shall regularize excess deposit. So first one, stop accepting fresh deposit. All existing please run up to maturity. Report the position to the RBI within 15 working days, and no mature deposit shall be renewed without express consent of the depositor. Probably in RBI, they might have given additional guidelines that don't accept even if the customer give consent. Maybe in reality, the situation would have been slightly different also, slightly tougher also. Are you getting it? Now we need to check interest calculation, and we need to check whether deposits are accepted based on a proper written application. Written application means obviously e-applications, electronic applications. Next, see whether the NBFC is maintaining register of deposits. See whether investment is made in the liquid assets approved by the Reserve Bank of India. See whether timely returns are filed or not. And suppose if NBFC is not accepting deposit, it is calling itself as a non-deposit taking NBFC, but systematically important or may not be systematically important. It may be middle layer, upper layer or base layer. Getting it? But if the NBFC is not accepting deposit, board of directors shall take a decision in the board meeting that this NBFC decided not to accept a deposit. Express non-acceptance of deposits resolution shall be made if the NBFC decided not to take deposits. So that is what this point is. Are you getting it? That point, this one not required. Next. Now auditor has to check what else auditor has to check in the audit of NBFC. We need to check prudential norms. So whenever an asset is classified as NPA, interest on that asset shall not be recognized on accrual basis. Only it will be recognized as income only if it's actually realized. Suppose a loan is treated as NPA, before it became NPA, some interest is recognized on accrual basis in the past 3-6 months. That interest we didn't receive. Now when the asset turned into NPA, we have to reverse it. What we need to do? Reversal of income. What is it called as actually? Reversal of income. So see, they'll ask you a question like this: write about audit points, or what do you verify with respect to NBFC prudential norm? Then you need to write this answer. What are NBFC prudential norms? You need to write the above answer, like performing asset, non-performing asset, substandard, standard, doubtful, 12 months, 18 months, that entire thing. Getting it? So provision, they may ask you a provision or they may ask you audit process. Audit process means this. Generally, since it is audit subject, what is important? Audit process. And if you want to write audit process correctly, first you must understand the provision. That's it. Clear? So first they spoke about provision in this chapter. In all the up to almost 5 or 6 question, they spoke about provisions. Thereafter, they are discussing audit processes. Are you getting the point? Next. Now, see, in NBFCs also, just like any other company, frauds will be happening. But there is a direction by RBI with regard to frauds. There is a direction given by RBI with respect to fraud. RBI Master Direction Monitoring of Fraud. RBI Master Direction Monitoring of Fraud. Okay, 2016. As per those directions, every NBFC shall classify frauds into the following categories. This is for unanimity of the reporting. See, RBI will prepare annual reports. So, in the annual report, one of the segment is NBFCs. How NBFC performance in India. RBI will prepare a report. RBI report will be there every year. Getting it? So, RBI will have to report to all the stakeholders what are the types of frauds happened in NBFC, how much quantum is involved in India with respect to various frauds committed by NBFC. So, since RBI has to report to all the stakeholders the types of frauds, first frauds has to be regularized in the sense, frauds has to be the names of the frauds. The terminology used for frauds should be uniform so that uniformity in reporting can be achieved. So as per RBI, in NBFC, any fraud that may be happened, that will fall under these categories. Any fraud, whatever, the fraud may be in any category, that can be categorized into these: criminal breach of trust, fraudulent encashment through forged instrument, manipulation of books of accounts through fictitious accounts and conversion, unauthorized credit facilities, negligence and cash shortage. You see here, negligence and cash shortage means there is no intention here. Negligence is not a fraud. Cash shortage is not a fraud. However, if the cash shortage is more than 10,000, it is always treated as fraud. If the cash shortage is more than 10,000, it is always treated as fraud. However, if it is less than 10,000, it is not treated as fraud unless intention is proved. Unless intention is proved, if the amount of cash shortage is less than 10,000, it is not treated as fraud. One more condition: if the cash shortage is more than 5,000 and it is not reported to the management by the cashier, cash shortage is there more than 5,000 and it is not reported to the management, which means cashier is hiding something. Even though it is more than 5,000, we will treat it as fraud. Suppose no, cash shortage is more than 5, but less than 10. Reported to the management also. This incident means nothing is hidden. So we will not classify it as fraud. Suppose if the cash shortage is more than 10,000, whether intimated to the management or not, doesn't matter. It's always fraud. Are you clear? Next, cheating and forgery is a fraud. Irregularities in foreign exchange transaction is also fraud. Irregularity they used. Irregularity means what? It may be fraud or it may be negligence. Irregularity in foreign exchange is treated as fraud only when the intention is proved. Only when the intention is proved. So for cash shortage and negligence, irregularities in foreign exchange, proving of the fraudulent intention is important. However, if cash shortage is more than 10,000, intention also doesn't matter. Straight away, fraud. Are you getting the point? All of you. Next, any other type of fraud which do not fall under above categories, residuary frauds, we call it as. That's it. So this entire point also I spoke. In examination, they'll talk about, write about classification of fraud, specifically negligence and cash shortage. Getting it? So you need to write this entire answer. Or they may give you a case study based question. NBFC, the NBFC manager is arguing that since the cash shortage is more than 10,000, since intention is not proved, he is treating it as negligence but not fraud. Whereas you are whereas you are treating it as fraud. In the light of the above circumstance, what is your opinion? They will ask you. You need to write this provision, and in the analysis, you need to write, since as per RBI provision, more than 10,000 cash shortage is always treated as fraud. If it is more than 5,000, management is not having knowledge, then also fraud. If it is more than 5,000, not exceeding 10,000, but there is no management knowledge, then also, if management is having knowledge, then it is not a fraud. Able to understand. Next. Write about special audit checklist. This was asked somewhere in May 22 exam or December 21 exam. This one is asked in May 22 or December 21. Correct. This was asked in exam directly. Direct question. Write about sample audit checklist for investment credit company, they asked. This is a question which they asked. Write about sample audit checklist. Write about sample audit checklist of an NBFC which is involved in investment and credit corporate. It's an investment credit company. Getting it? For them, what are the audit points that you verify? You see here, it's investment company and also credit means loans giving company. Investments they are making, loans are also they are making. Getting it? So, now you see here. So income recognition on securities. Remember, they may not be asking entire question. They may be asking only one part of it. 3 to 4 marks question they will be asking. Or they may be asking how investments made by NBFCs are audited by auditor, especially in case of ICC. If at all you are appointed as an auditor of investment credit company, what are the points that you verify with respect to verification of investments? What I will verify, how the investments are classified. Is it current and long term? We check valuation part. We check whether investments were made in group companies, how they were valued, are they valued as per accounting standards or not, and we get confirmation certificate if the investments are held with the depositors. Because investments are in demat format, right? So we need to look at demat statements, depositor contract notes, all that. And see if it is unlisted debentures, unlisted debentures, unlisted bonds. If at all you invested in unlisted bond or unlisted debentures, as per RBI now, NBFC shall be treated as term loan, but not as an investment. And there is something called a single borrower. maximum limit for a single borrower. Suppose if NBFC has invested in some particular debenture or bond for more than certain amount, that is not permitted by RBI because there is a restriction for single borrower. How much NBFC can give loan, how much NBFC can give investment in a single company or single borrower, there is a limit from RBI. Able to understand? That's why you see consortium arrangements will come. Banks no. Suppose you can repay 20,000 crore to me. I can sanction you 20,000 crore, but the problem is my liquidity ratio cannot be maintained if I give 20,000 crore loan. So what I will do, I will join with other banks and all of us together will lend you 20,000 crore. Consortium loans are given by banks not because the bank do not have funds, because bank cannot maintain liquidity position. Are you getting the point? So verification of investments by NBFC. Verification of investments by auditor of NBFC, especially in case of investment and credit company. This itself can be asked as a 4 marks question. Are you getting it? See, every time whenever you are reading question, how a question can be coming from that aspect, you need to think. Getting it? And you say 99% it will match in the examination. Then loans and advances normal point, bills discontinued normal point, NPA normal point. In that, investments is only the key point in this entire question. Able to understand? You all have to go through past 4 RTPs including May 23 attempt, relevant RTP, past 4 RTPs and past 4 question papers. More than enough. No need to read 20 attempts papers. Okay, that's just a trick. Okay, that is not at all relevant. What 20 years papers? Auditing provisions have substantially changed 4 years back. Audit report provision, no, before 2018 is completely different format of audit report. That time key audit matter standard itself is not there. Key audit matter standard applicable from 2018. Material uncertainty related to going concern is applicable from 2018. Getting it? Many standards were. Why to that extent? Standards on auditing itself came in picture from 2010. Before that, there is something called auditing and assurance standard. AAS 1, AAS 2, AAS 3, like that we have. When we studied CA Inter, we have AAS 1, 2, 3, like that. What is the use of studying last 20 years? Moreover, auditing paper is being sincerely tested only from 2018 onwards. After your existing scheme, you're all existing students, right? Logically, if at all next year 2024 scheme is not there, we call you as new scheme students. Correct? Earlier we have something called old scheme. That is where in that old scheme cooperative societies audit is there. Audit of items of financial statements were there. So many useless syllabus is there. Now that entire syllabus is shifted to CA Inter. Now in CA Final they have added all these new topics. Able to understand? So 4 years before, the question papers were very substantial, very substandard. Getting it? Very poor. Question papers were very poor. When I went to my CA final exam, my question paper is 2 pages. That's it. Only 2 pages. ISCA also we have only 2 pages. Getting it? So now the audited question paper is really dynamic. They are testing you really the knowledge. Earlier we used to study 5 chapters only in audit and go and write. Easily we get 50, 55. I got 59. Okay, so it's very easy. So without studying audit, we used to qualify easily audit. Now there is a lot of difficulty. Now you need to really read entire syllabus. So there is no point of reading 10 years questions, 15 years questions, nothing. If you read past 4 years questions, which is more than enough. In fact, I will say past 4 attempts is more than enough. Getting it? So you see 2021 May, 2021 December, 22 May, 22 November, 4. That's enough. And RTP is also up to May 2023, past 4 or 5 you cover. More than enough. MTP is no point at all. Because MTP is just a copy paste of study material questions only. You see, if you want any subject you take MTP, they just copy paste study material exercise questions or illustrations only. Names, amounts only they will change. Correct? Next. Then finally, what are the additional duties of an auditor for under RBI directions? I told no. Audit NBFC, we have 4th set of directions. Like totally how many directions we see in this particular chapter, mainly we read. See, there are investment directions were there, frauds related directions were there, that we don't read specifically, exclusively so much. But these 4 set of directions we frequently come across. Non-systematically important, non-deposit taking, Reserve Bank directions. Systematically important, non-deposit taking and deposit taking directions. Acceptance of public deposits directions, audit report directions. Now in this question, we are discussing audit report directions. We are discussing what? Audit report directions. As per that, you have to give anyhow audit report to shareholders. What is the format of audit report? SA 700 format. Getting it? In addition to that, from the auditor, you must prepare another report to the board of directors. What? To the board of directors. It is something like a compliance report. What is it? It is something like a compliance report. You need to report to board of directors what are all they complied, what are all they have not complied. From the auditor's perspective, you need to give a report to the board of directors. Same way, you have to give a non-compliance report to RBI. We call it as exception report. What do we call it as? Exception report. So you need to file an exception report with RBI. So they may ask you in exam straight away, write about exception report to RBI. Very simple answer. You are appointed as an auditor of an Nbfc, so and so entity which is involved in lending of loans and has got registration of Nbfc, registration from RBI as an Nbfc. So as part of, you have completed the audit, you have done all your job. Now you are requested to submit an exception report to the RBI. So write about this exception report, 4 marks question. So you need to write this. Now what is this exception report? Nothing but you will report non-compliances with, the following set of directions. What are the 3 directions? Acceptance of public deposit directions, non-systematically important non-deposit taking NBFC directions, deposit taking or systematically important non-deposit taking directions. If auditor identified any non-compliances with these 3 directions, auditor has to list out the list of non-compliances and report to RBI. That's it. You need not report about compliances. You have to report only about non-compliances. That's it. This answer is done. Are you getting the point? See, where in case of NBFC, the statement regarding any items referred in paragraph 3 above is unfavorable or qualified in the opinion of the auditor. Like the company has not complied with what? Provisions of chapter 3B of RBI Act, nothing but registration provisions. Chapter 3B is dealing with NBFCs. In RBI Act, each chapter deals with some set of entities. This chapter 3B deals with NBFCs. Or you have not satisfied acceptance of public deposit directions. Or you identified non-compliances with NSI ND directions, or you identified non-compliances with systematically important non-deposit taking and deposit taking NBFC Reserve Bank directions 2016. Nothing but you have not complied with the base layer directions, middle layer and upper layer directions. Are you getting it? But here, don't use the word base layer, upper layer word. You use the directions name only, because directions names are not substituted. Understand? Just referring only changed. The referring will be there. Earlier we used to refer to so lengthy, non-NBFC, non-deposit taking, non-systematically. That big reference is there. Now we are simply calling it as base layer. Getting the point? Now deposit taking NBFC, systematically important, non-deposit taking NBFC, we are referring it as middle or upper layer. So reference only changed. Provision is not changed. Are you getting it? Classification names only changed. Provision is not changed. Understood or not? Still, in the amendment, there is something which is more important. So what base layer comprises? Now there is a clear one more small clarification. Base layer comprises NBFCs which are non-deposit taking. Below asset size of 1000 crore. Below asset size of 1000 crore. Getting it? So now this created a confusion. Now NBFC generally below 500 crore, no, non-deposit taking below 500 crore, it is non-systematically important. Now you see here references to NBFC with effect from 1st October 2022. How NBFCs shall be referred? NBFCs which are NBFC which is non-deposit shall be referred as NBFC base layer. Whereas NBFC deposit taking, NBFC non-deposit but systematically important. Getting it? Shall mean either middle layer or upper layer as the case may be. That's what we discussed, right? But now you see, generally, NBFC non-deposit means where systematically important word is not used. No, by default it is what? Non-systematically important. If the NBFC is not accepting deposits, we straight away refer it as ND. Suppose if it is having asset size of more than 500 crore, we will classify it as systematically important non-deposit taking NBFC. Once it is systematically important non-deposit taking or deposit taking NBFC, we will classify either as a middle layer or upper layer as the case may be. Now here, when they copy pasted this notification from RBI website, no, they missed one line. I will show you. That is the reason why there is a confusion. I bet 99% will never notice this. I think we saved it. Just a minute. Now, these are the list of companies which are classified by RBI. Is it coming under non-deposit or investment credit? Which layer it is? So these are the list of NBFCs. Almost more than 9,000 NBFCs were there. There are more than 9,000 NBFCs were there in India which are classified. You see, there is no upper layer right now. Sorry, there is no top layer right now. And upper layer, no. There is one more amendment. Top 10 NBFCs based on asset size in India. They are straight away upper layer. They are straight away upper layer. Top 10 NBFCs in India. You see here. You see here totally 11 have come. 11 NBFCs have come. Getting it? Totally. Which are coming under upper layer. Remaining NBFCs are middle layer. Now all these NBFCs are given in alphabetical order. After middle layer, base layer NBFCs will come again. They were listed in alphabetical order. Now they are middle layer. Moreover, they are investment credit companies, or it may be core investment company, or it may be ICC, or it may be microfinance institution, or infrastructure finance company. Getting it? So infrastructure debt fund. So different subclassification. Getting it? So this is a layer. This is classification. This is category. Is it a non-deposit or deposit? Or is it a systematically important or simply a non-deposit taking NBFC? So that is also they have given. Getting it? So their address is given, this list is given. Now, I would just want to show the RBI provision clearly because that is very important. In exam, if that question is tested, you should not confuse. Just 1 minute more, it will be available. Somewhere it will be available. The link will be available. Earlier, direct search on it will come. Yeah, fine, got it. RBI scale-based regulations. Yeah, this is the yeah, correct. This is exact one. Okay, RBI scale-based regulations. We call them as scale-based regulations. You see here, inside this, they have given this point. You see here 2.1, the top, this one 2.1. Okay, visible, right? Now this is what copy pasted. All reference to NBFC non-deposit shall mean base layer, and all references to NBFC which are deposit taking and NBFC systematically important non-deposit shall mean middle or upper layer as the case may be. Now here there is a hyperlink given too. That is not copy pasted in the institute book. Getting it? Because no, when I am reading the institute material, no, first amendments, no, they use it in base layer less than 1000 crore. Now here they are referring non-systematically important as base layer. Are you getting my point? Non-systematically important means less than 500 crore. In base layer they mentioned 1000 crore. What is that? That is clarified in this link. Getting it? You see here, it is clarified that existing NBFC non-deposit systematically important having asset size of 500 crore and above, but below 1000 crore except those necessitating featuring middle layer. Like in middle layer also there is a scoring mechanism. So only if that score comes, middle layer it will come. So if an NBFC having more than 500 actually systematically important, it should directly come under either middle or upper layer. But less than 1000 crore and does not satisfy benchmark scores listed for middle layer and upper layer, they continue to be falling under base layer. This point in the institute amendments notification they didn't give. Getting the point? See, you understood what is my doubt here? You understood my doubt? So in order to understand that, I saw the original entire notification. So that above 2 is no, that 2 note point is given below, no, that is not given by the institute. So because of which it creates a confusion. Some students don't even understand this, right? Because you have never seen this. See, normally if an NBFC asset size is less than 500 crore, it's non-systematically important. As per the new scale-based regulations, every non-systematically important NBFC is a base layer. Now what is base layer they defined here? What is base layer they defined? While they defining, if at all here, they use 500 crore means happy, no confusion. But they use 1000 crore. If NBFC having asset size less than 1000 crore, they call it as base layer. My problem is, below you are saying here, non-deposit, non-systematically important comes under base layer. Systematically important NBFC comes under middle layer. In the above list of base layer, 1000 crore you have used. Now, actual systematically important NBFC means what? If the asset size is 500 crore cross, it's a systematically important. As per this last point, what it should come? Middle layer. But you are given in the list what? Less than 1000 crore base layer. What is this confusion? So, I opened RBI. Here, when they are copy pasting, this 2 point they didn't copy. Are you getting it? Institute people also copy paste on, So, the fellow did not understand. Whoever is copy pasted this work. Okay, so the second point not given. In exam, they may give you that question only. If at all the paper center knows this provision, they may give that question only. So NBFC, which is non-deposit and is systematically important, asset size is more than 500 crore, but not exceeding 1000 crore, and which does not fall under middle layer score point approach. Getting it? Still be classified as base layer. Are you clear? That's it. I'll show you here how the scorecard also looks like. That is given here. Like I told you, existing NBFCs 2 crore net owned funds, right? So by 2025 it is 5 crore. By 2027 it is going to be increased to 10 crore, which means there is a continuous amendments for the next 2 years. Next. Here there is an appendix given. The parameters, how upper layer, middle layer, all that will come. So here they have given. So what is the size and leverage? So based on that parameter weights were given. So whether NBFC comes under middle layer or upper layer depends upon these parameters. And they have given one, they have given few more criteria. Like I think we have given here itself. I think in our book it is covered. You see here. The top 10 NBFCs in terms of their asset side shall always be in upper layer, irrespective of any factor. In India, there are 9,000 or 7,000 plus NBFCs. The top 10 NBFCs who are having biggest assets, highest assets value, they always come under upper layer. Remaining NBFCs, will they fall under upper layer or middle layer? We will check based on the scorecard, that benchmark parameters. Now, what other NBFCs will come under base layer? NBFC is a peer-to-peer lending. They come under base layer. NBFC, where they are functioning as an account aggregator, they are base layer. Non-operative financial holding company, it's a base layer. NBFC is not having public funds and not having any customer interface, they will also come under base layer. They may ask you this itself for a 4 marks question. Write about RBI skill-based regulations means, like, they'll ask you more specifically, what are the NBFCs that fall under base layer? Getting it? They'll give you only this point. You see here already 4 points were there. Yes or no, 4 to 5 points were there. If you write this in exam, you'll get half page, more than half a page answer. Getting it? So these NBFCs straight away will come under base layer. Now you see peer-to-peer lending. What is peer-to-peer lending? Now many example, suppose I register on one platform. There is one platform which is created where I will be registering as a lender. You also registered on that platform where you register as a borrower. Getting the point? There is a medium NBFC which is there. The medium is actually NBFC. That application is maintained by NBFC. Now, the NBFC screen my application of borrower. Getting the point? The borrower application will be screened. Lender application will be screened. Now, a borrower need funds. NBFC will not give loan. NBFC has a list of lenders in their list of application. So, they will give loan. That's called peer-to-peer, customer-to-customer lending. For NBFC, you are a customer. Borrower is a customer. Lender is also a customer. Now, I will scrutinize the borrower. See, generally, if I have excess funds, I want to give loan to my relative. I am doubtful whether he will repay back or not. So, how to assess his credit rating, all that legally? Okay, now there is a new model of business. It's a new fintech model. Getting the point? Same way, account aggregator. What is account aggregator? Example, Bank Bazaar is there. Yes or no? Credit is there. Credit is one account aggregator. Credit. Credit? Have you heard? Yeah, credit. So it's similar to something account aggregator. I'm not sure exactly is it account aggregator or not, but it is similar to account aggregator where entire your information is at one place. See, now when a bank want to give you a loan, getting it, they want to see what are the bank accounts you are having, where and all the loans you are having, all that. Now CIBIL report is there, but CIBIL report is also having certain limitations. Now I form one entity where with respect to one customer, what are all the loans he is having, what are all the banks he is having, what are all the finances sources and applications where and all he is making. I will maintain one borrower related information at one place. Then I am called as account aggregator, where I am aggregating account information of all the borrowers. Are you getting the point? Next. So next one, non-operative financial holding company. It is similar to core investment company. It is similar to core investment company, but not core investment company. Core investment company means what? If 90% of the total assets, if more than 90% of the total assets are represented by investments in subsidiaries and associates and joint ventures, then we call it as a core investment company. Suppose Aditya Birla Group Holding Company is there. That is not core investment company. That is actually non-operative financial holding company. What is it? Non-operative financial holding company. There are some companies which are in India which are non-operative financial holding companies. These companies will not operate in any business. They are just holding companies for the name's sake. That's it. Are you getting the point? And NBFCs where they don't have public funds access or where there is no direct customer interface, they don't have any direct interaction with the customers. Some back-end service providers, NBFCs will be there. Those NBFCs, like example, NBFC recovery NBFCs will be there. Some recovery related service providers will be there. They may not have customer interface. Getting the point? So those NBFCs will be classified as base layer NBFCs. Now, there are some NBFCs which will fall under middle layer. This itself can also be coming as 4 marks possibility. Are you getting the point? Now, all deposit taking NBFCs, irrespective of asset size, since it's deposit taking straight away, middle layer, or it may come under upper layer, depending upon the benchmarks, or non-deposit taking with asset size of 1,000 crore and above, they will also come under middle layer. NBFCs which are taking standalone primary dealers, primary dealers, they buy and sell government securities. SPDs we call them as. What they do? Buy and sell government securities. And core investment companies. Which core investment company? Core investment company with an asset size of more than 100 crore. Which core investment company? Core investment company with an asset size of more than 100 crore. If core investment company having asset size less than 100 crore, it is exempted from registration of NBFC, yes or no? Have you seen NBFC exemptions? In exemptions, there is one more exemption. A core investment company with an asset size of less than 100 crore, that is called as non-systematically important core investment company. What is it called as? non-systematically important core investment company. Generally, for all NBFCs, systematically important, non-systematically important criteria is 500 crore. But for core investment company, 100 crore is the criteria. Now, which core investment company is exempted from NBFC registration? That core investment company whose asset size is less than 100 crore. We call it as non-systematically important core investment company which is exempted from registration. The question of base layer, middle layer do not arise. Now, any other core investment company where the asset size is more than 100 crore, which is a systematically important NBFC, straight away come under middle layer or upper layer. Are you getting the point? But NBFC core investment companies are always middle layer. This is what they gave. NBFCs which are core investment companies will always come under middle layer, and housing finance companies, IFCs, infrastructure finance companies, all that will come under middle layer. Now, upper layer. Upper layer comprise of those NBFCs which are specifically identified by RBI as warranting enhanced regulatory requirements based on some parameters and scoring methodology as provided in appendix. That's what I showed now. This is actually appendix. We clicked on this only. That only opened. Yes or no? So, appendix. Getting it? So, and further, the top 10 NBFCs shall always reside in upper layer, irrespective of any other factor. Are you clear? Now, top layer is generally empty. This can be populated. This can be filled only by Reserve Bank if it is substantial increase in potential systematic risk from NBFCs which are there in upper layer. If at all an NBFC which is there in upper layer, there is a significant risk for that NBFC. Risk is very high. Then those NBFCs RBI will reclassify under this one, top layer, where RBI will directly monitor. Are you getting the point? Now, categorization of NBFCs based on specific activity. Now, NBFCs are again classified based on activity in which they involve. Like regulatory structure envisages scale based as well as activity based. The following prescription shall apply. NBFC peer-to-peer. See, these are all activity based. What activity they are doing? Peer-to-peer NBFC, account aggregator, non-operative financial loading company, NBFCs without public access or no customer interface. They all come under base layer. This itself can come as 6 marks question or 4 marks question. Getting the point? Write about categorization of NBFC which are carrying out specific activity or based on activity they carry out as per the new scale based regulations. 4 marks question they'll give, which means you need to write this one. Are you clear? Now, NBFCs which are peer-to-peer lending. Now you see here 1000 crore, 500 crore, that number itself is not used. That number itself is not used. So, NBFC which are directly peer-to-peer lending, which are account aggregator, non-operative financial loading company, not having public funds, not having customer interface, they all straight away come under base layer. Next, NBFC, deposit taking, core investment company, infrastructure finance company, housing finance company will be in middle layer or upper layer as the case may be. Primary dealers, NBFC infrastructure debt fund will always remain in the middle layer. This can be asked as an MCQ. Able to understand? They will give you statements below. Which of the following statement is correct? They will give you any 4 statements out of this. They will select and give you. You need to pick the right one. Further, you need to understand clearly what are they. Now, the remaining NBFCs which are not other above, which are not peer-to-peer, which are not account aggregator, which is not a non-operative finance company, which is not a NBFC having public access, which is not an NBFC having customer interface, which is not a deposit-taking NBFC, which is not a core investment company, which is not an infrastructure finance company, which is not an infrastructure debt company. Yes or no? Other NBFCs, namely ICC, microfinance institution, factors, MGCs, mortgage guarantee companies, they could lie in any of the layers of the regulatory structure depending upon the scale based parameters. This is something like summary. For all the above discussion, this is something like summary. They summarized once again, they revised once again. Are you getting the point? All of you? That's it. So you have to read twice. Again, remember here there is a second point, note point which is given in the RBI notification. There is a clarification. What is the clarification? NBFC, non-deposit, systematically important with asset size more than 500 but not exceeding 1000 crore. They will be treated as base layer only. That's a clarification given. Are you clear? That's it. So with this, NBFC amendment part is also completed. Confident or not? Now let's come back to audit report provisions. Just 2 minutes. So the next one, can I proceed? Next one, Now we are actually discussing audit report provisions. We are actually discussing audit report, to directors and to RBI. To RBI we discussed exception report. If auditor has identified any non-compliance with RBI Act Chapter 3B provisions, or if auditor has identified any non-compliance with middle layer provisions and upper layer provisions, if auditor has identified any non-compliance with base layer NBFC provisions, then auditor has to submit an exception report to RBI. Are you getting it? Now, same way, auditor has to give a separate report to board of directors also as per RBI directions. Auditor has to give a report to board of directors. Now, what report? What are the points the report should contain? That is the question. It depends on, first of all, there are some common points we need to include. For all NBFCs, we need to include certain common points. What are the common points? Is NBFC conducting a proper activity, finance activity? Is it having a valid registration certificate? Suppose if the company is already holding certificate of registration, is it eligible to hold? Whether the company is meeting net owned fund requirement as given in master direction. This is for base layer NBFC. In case of upper layer and middle layer NBFC, we look for whether NBFC is maintaining minimum capital requirement adequacy ratio. These are the points which auditor has to comment with respect to every NBFC while giving report to board of directors of the relevant NBFC. Are you getting the point? Now, further, suppose if NBFC is accepting deposits, you are giving a report to board of directors where you are including the above 3 points, whether NBFC is eligible to hold a certificate of registration, whether are they having a valid registration certificate, whether are they maintaining net owned funds and capital requirement adequacy ratio criteria correctly or not, you are giving this point. In addition to that, since you are doing an audit of NBFC which is accepting deposits from public, you should also report on various other points. Next point that you need to report is whether the deposits accepted by the NBFC, are they within the limits? Are they within the overall limits? Now, when deposits are accepted, overall limit means there is a overall limit on the borrowings of a company. Like in Companies Act also we have a provision. Overall borrowings company how much can have? Even deposits also we have a provision. Yes or no? Eligible public companies, non-eligible public companies, what are the aggregate deposits they can have? Right now existing borrowings are how many? Right now how much I can borrow from the deposits? All comprehensively we need to evaluate. Here, the way the public deposits along with other borrowings like debentures and bonds, borrowings from shareholders, which are not excluded from the definition of public deposit for these NBFCs, are they within admissible limits? Simply whether NBFC overall borrowings through deposits and other than deposits, whatever borrowings were there which will come as part of deposits plus debentures and bonds and borrowings from shareholders, all put together, are they within the overall limits specified to the NBFC as per the Reserve Bank directions? Are you getting it? See, Reserve Bank directions were very lengthy. We don't have entire all the provisions of those directions. Getting it? Next, suppose if at all the overall borrowings of an NBFC, namely deposits, if they are exceeding the quantum specified, auditor has to report the same. Further, if the NBFC has accepted any deposit without a minimum credit grading, we need to comply downgrading, all that refunding. See, we need to check the compliance with the acceptance of public deposits guidelines. Auditor has to report, especially in case of NBFC which is accepting deposits, NBFC which is systematically important, you need to check whether the NBFC is maintaining capital adequacy ratio and report to the board of directors. Dear director, your NBFC has maintained minimum capital adequacy ratio, 25% it is maintained. Like that you need to reply. Then this is not required. And auditor has to report to board of director whether the NBFC has violated any restriction on acceptance of deposits. Auditor has to report to the board of directors whether the NBFC has defaulted, to the depositors. Auditor has to report to the directors whether NBFC has complied with the prudential norms, income recognition, asset classification norms. Auditor should report to the board of directors whether NBFC has maintained liquid assets as required. Auditor has to report to the board of directors whether the returns, quarterly returns that are to be submitted with RBI on deposits is submitted or not. This is not required. So in this entire list, any 4 points. This entire list, any 4 points. Are you getting it? Now in exam, they'll ask you a question like this. You are appointed as an auditor of an NBFC, which is deposit taking NBFC, or it may be a systematically important non-deposit taking NBFC. Getting it? Now, as part of your audit, you have submitted the audit report to the shareholder. In addition to that, as per RBI master direction, you have to give a separate report to the board of directors. What are the contents of the board of directors? Any 6 points. Write any 6 contents, 6 items that are to be included in a special audit report submitted to board of directors. In case of NBFC, accepting public deposits or non-deposit systematically important NBFC. For normal NBFCs, what we talk, anyhow we need to talk these points. Whether NBFC is holding proper registration certificate, are they continue to hold the registration certificate? If the NBFC is a base layer, are they complying with net owned funds criteria? If NBFC is accepting public deposits, whether overall borrowings are within the limits? If the NBFC has accepted more than public permitted limit, are they regularized as per the RBI directions? So next, are they maintaining capital requirement adequacy ratio? Whether the NBFC has defaulted in repayments, whether NBFC has complied with prudential norms, whether they have complied with liquid asset requirements, whether the NBFC is filing return of deposits with RBI on a quarterly basis or not. All these points we have to report to board of directors. Remember, they know very well about their company operations, but still they are expecting a report from the auditor. Dear auditor, from your point of view, you give a compliance report on all these items. Are you clear? Next, suppose in case of NBFC, which is not accepting public deposits, then in the audit report, there are few more points which you need to cover. Now, when the NBFC is not accepting public deposit, the company should take an explicit decision. Getting it? What is the explicit decision? Board resolution should be there. Regarding what? That the company decided not to accept a deposit. So see whether the board of directors has passed a resolution for non-acceptance of public deposits. Even after passing the resolution, did they accept any deposit? Check out. Getting it? Next, whether the company has complied with prudential norms, whether capital adequacy ratio has been correctly arrived, whether annual statements are furnished to the RBI regarding capital funds, risk exposure funds, all that. And see whether NBFC is correctly classified as a microfinance institution as per the master directions. If it is classified as MFI, some rules will apply. You just have to mention whether is this NBFC classified as a microfinancial institution. That's it. Now, suppose if the NBFC is not required to hold certificate of registration because of some criteria. If NBFC is not required to hold certificate of registration, they are having NBFC activity but are exempted from having certificate of registration, then you need to just report on this to the board of directors. Now here, whenever you give any comment negative, no, you need to give reasons also. Whenever you give comment negatively, you give reasons also. Suppose you mentioned the NBFC has not maintained capital adequacy requirement ratio. It's a deposit taking NBFC, CRAR is not maintained, or it's a non-deposit taking systematically important, CRAR is not maintained. What is that? Clearly mention the reason. The CRAR is maintained at 14% only. The tier 1 capital is 9% only, which is actually 10%. So there is a violation of capital requirement adequacy ratio as required by middle layer, upper layer provisions of the RBI. Yes or no? All of you. That's it. So with this, predominant chapter is completed. Then compliance with CARO. In CARO, this first point do not apply for NBFCs which are primarily lending credit, investment credit company. To them, first point do not apply. Inside class 3, first point do not apply. Getting the point? You can see for this Muthoot Finance. Muthoot Finance is also a credit company which is giving loans. Getting it? And this already we have seen, yes or no? This entire clause 3, when we are discussing CARO itself, we have seen. Next, what is another one? Clause number 16. What is clause number 16? Clause number 16, what is important is whether NBFC is required to be registered under 45IA. You need to check. Every company you are doing audit, Tata Motors have clearly mentioned that the company is not liable for registration. Why? Because Tata Motors do not satisfy principal business criteria. So they are not liable for registration. So whether now, okay, they are not liable for registration. Have they conducted any activity of NBFC? See, activity of NBFC means principal business criteria. If principal business criteria is satisfied, obviously NBFC activity is conducted. Now, is the company core investment company? If so, whether it continue to fulfill the criteria? In case it is an exempted core investment company, whether it continue to fulfill such exemption criteria? Which core investment company is exempted? Yeah, less than 100 crore asset size core investment company. If the group has more than one core investment company, if yes, indicate the number of core investment companies. Tata Group has 6 core investment companies in the group. Tata has 6 core investment companies in the group. Getting it? So they mentioned that it is 6. And whereas Tata Motors reply that, yeah, the company is not a core investment company. Because Tata Motors is not a core investment company. Now, whether the company is a core investment company, no. Are you getting it? So, this is no, this is not applicable. Whereas third point is 6 for Tata Motors reporting requirement. Are you clear? This is CARO reporting. Now, what about applicability of Ind AS to NBFC? Division 3 will apply. Division 3 is liquid assets format. Yes or no? Where we don't speak about non-current, current assets. We speak about liquid assets and non-liquid assets. Where we classify assets and liabilities based on liquidity wise. Getting it? Now, how Ind AS Division 3 is different from Division 2? They have given some points. This is also an important question. Many times has been asked for 4 marks question. Any 4 points you have to write. For NBFCs, Ind AS Division 3 is applicable. Schedule 3 Division 3 is applicable. Getting the point? And for NBFCs, Ind AS is also applicable. Ind AS is applicable for NBFCs, and they need to prepare financial statements as per Schedule 3 Division 3. How Division 3 is different from Division 2? They have given some points here. Getting it? Can you read this? It's a very basic thing. Okay, so with this, the audit of NBFC chapter is completed. We have thoroughly discussed almost 1 hour 20 minutes, 1.5 hours we discussed. Confident? Yes. See, once we give the audit report, once we submit the audit report, there are certain reviews that will be taken care. There are certain reviews that will be made on us. Various types of reviews that we generally undergo during the audit and after the audit. For listed entities, EQC review. For listed entities, there is a review called Engagement Quality Control Review as required under SQC. There is a standard SQC which says that, sorry, SA 220 read with SQC. SA 220 says that every listed entity audit report must not be signed unless an engagement quality control review has been conducted. Now this is before the date of signing of the audit report of a listed entity. So there is a review called engagement and quality control review. Now, once audit report is signed, we are supposed to various types of review like peer review, quality review, NFRA review, financial reporting review board review, tax audit tax audit quality review, like this various types of reviews that we are having. Getting it? Now we are having only these 2 reviews in our syllabus, where peer review is conducted by peer review board, quality review is conducted by quality review board. Getting it? Peer review board will issue guidelines regarding peer review. Right now the latest guideline is peer review guidelines 2022. This is the latest guidelines. Before this there is a statement on peer review 2021. Now peer review guidelines 2022 is latest. Quality review, these are the guidelines which were issued somewhere in 2009-10 or somewhere when the quality review board is constituted. At that time quality review guidelines were that is applicable. Now in both the cases, whatever assurance functions. Now peer review scope is assurance functions. What is it? All assurance functions are covered within the scope of peer review. All assurance engagements. Assurance engagement means what? Stat audit, non-stat audit, everything is covered. Tax audit, internal audit, everything is covered. Whereas within the purview of quality review board, only statutory audit under Companies Act is covered. What is the scope of quality review board? Statutory audit under Companies Act. Actually, all audits are covered in quality review board, but right now practically, as per the implementation guide of quality review, the quality review board is now only looking about statutory audits conducted under Companies Act for quality review, whereas peer review board will cover all types of assurance functions that are performed by the auditor, whether it's a statutory audit, voluntary audit, tax audit, GST audit, companies audit, or LLP audit, whatever, corporate societies audit, everything is covered. Every audit is covered. In both the cases, the work approach is similar. The work approach is similar, but the objective is different. Peer review is conducted by peer review board, which is one of the committee in the ICI. Example, I think some part of ethics will also be covered here itself, indirectly. You will understand all that. Now, you see here, This is ICA website. We have committees, right? The committees are multiple types: standing committee, non-standing committee, directorate committee. Directorate committee means you might have seen this in ethics, code of ethics. Any directorate discipline, directorate committee, board of discipline. Schedule 1 offence shall be referred to board of discipline. Schedule 2 offence shall be referred to directorate committee. Yes or no? Like now, there are various non-standing committees that were there. Various non-standing committees. IndAS is issued by Auditing and Accounting Standards Board. Yes or no? AASB. Auditing and Assurance Standard Board is what? Auditing standards were issued by Auditing and Assurance Standard Board. What is Auditing Assurance Standard Board? Who are the members of Auditing and Assurance Standard Board? All that is given. This is a committee of ICI. Understand? This is one committee of ICI. Accounting Standards Board is one committee of ICI. Peer Review Board. Peer Review Board is another committee of ICI. You see here. Peer Review Board is another committee of ICI. And you see here, list of the firms having valid peer review certificate. These are the firms which are having peer review certificates. Approximately more than 5,000 firms will be there in this list. Getting it? Now, when the peer review certificate was issued, until when it is valid, you can find all the details. So what is the firm name? What is the firm registration number? Where the firm is situated? When the peer review certificate was issued last time, until when it is valid. So entire that list of firms is given in this. Okay, next. Now you see applicable important information for peer review. Like you see here, peer review guidelines were given. This is the latest guidelines based upon which amendments material of ICI was done. Getting it? So this is a peer review guidelines which are given, almost 112 pages guidelines. Peer review guidelines. From this, we need to discuss some 10 pages content where there is an amended portion. In the entire peer review itself is from this 112. See, actually, this is 112 pages because in peer review, there are so many communications will happen between the peer reviewer and the peer review board and the practicing unit. First of all, who are the parties involved in peer review? Who are the parties involved in peer review? There is something called peer review board. There is something called practicing unit and peer reviewer. What is we call it as peer reviewer? Getting it? Now this peer reviewer is also a chartered accountant. Practicing unit is a CA firm. It's nothing but what? CA firm. It may be a sole proprietary firm, or it may be a partnership firm, or it may be a sole practitioner, individual practicing member. Getting the point? Now peer review board will appoint a peer reviewer for the practicing unit for conducting peer review. Peer means what? Colleague. Getting it? Your friend is your peer. In organizations, we call them as peers. In CA fraternity, who are peers? Each CA member is a peer of another CA member. So it's a review by one member of another member's work. So that's called peer review. Are you getting the point? Now, what is peer review board? What is the composition of peer review board? Who are the members of the peer review board? That is one question in peer review. Who is a peer reviewer? What is his eligibility criteria? What are his rights and duties is one question. What is a practicing unit? Which practicing unit is eligible for peer review, liable for peer review? Which are not liable for peer review? That is one question. Are you getting the point? Now, liability for peer review has been changed. Now, which practicing units are liable for peer review? There is a peer review mandate. Now there is a peer review mandate where peer review applicability has been discussed in phase 1, phase 2, phase 3, phase 4, phase 5. Peer review is applicable for various practicing firms. Now which firm are you liable for peer review? Suppose I am having an audit firm, having 3 or more partners. I am having so and so entity audit. Am I liable for peer review? Look at the peer review mandate. Inside that mandate, under which phase you will fall, check out. If you are falling under phase 1, you are liable for peer review from 1st April 2022 onwards. If at all you fall under phase number 2, implementation guide, 2023 April, 2024 April, 2025 April. Are you getting the point? So this is an amendment. Earlier, peer review applicability is based upon level 1, level 2 practicing units. Before that, 3 levels were there. Later they reduced it to 2 levels. Now institute decided it's not level 1, level 2, nothing such. Let us implement peer review by 2025 to all the practitioners. Now let us issue a peer review mandate. This has been finalized in October 2022. Since it is finalized before 31st October 2022, it is applicable for our exam. Just 1 week delay happened, now this is not applicable for our exam. Just 1 week, if the institute finalized it lately, it would have not been applicable. Are you getting the point? Yeah, it is done in 21st October or 22nd October. Peer review is finalized. Able to understand? Now, so who is a peer reviewer? What is his eligibility? What are his qualifications? All that we are going to discuss. Confident? Now, let's start. Let's start a discussion. $159. So, what is a peer review? Inside this peer review, the definition has been amended. By the way, the smart notes I gave is edition 22 notes. Getting it? For peer review, amendments were not incorporated in this, but I will read like in conjunction with amendments material. You see here, this is the amendments material which I have issued. You can download this in our application also. Sreshta for CA and CMA, there is an application in the Google Play Store. You can download that. Or you can even directly read from the institute book. If you want, I will explain from institute book directly. Institute book means amendments book only. Okay, yeah, fine, I'll do that then better. Because it's there for, this access is there for everybody. Or I think, let's go with this only because I simplified it very well. Okay, I simplified it very well, and this we need to read with my main book. So I have a module 1. Peer review, quality review 356. Just 1 minute. The app will not work if I don't remove. There is an app called Sreshta for CA. See, in iOS device, it's class plus app. Okay. In Android, it is directly our name, white label app is there. Sreshta for CA and CMA. So you just download that app, and inside that you will find options. Just 1 minute. Just download it. So here, explain the concept of peer review is there, right? Inside this, there is an amendment. The amendment 1, it is in our material, there is a question number 1. Inside that our material, in institute book, it is concept number 1. The ICI study material, main study material, it's concept number 1. Okay. Now, inside that, there are some key terms of peer review. There are some key terms of peer review. Inside that, earlier we used to have a word called statement on peer review. Now it has been revised to Peer Review Guidelines 2022. Now you see here, so the word statement has been substituted with the guidelines. Statement on peer review has been changed to Peer Review Guidelines. Inside the same question, there is another amendment. There is another amendment. Like this is the amendment, audit quality maturity model where applicable, or any other regulatory requirement as may prescribed by the council or any other committee. Audit quality maturity model. What is this? Audit quality maturity model. See, here earlier we have this peer review, right? Here there is we have something called technical professional ethical standards definition. There is something called technical ethical professional standard definition. Additional wordings added. The words technical professional ethical standards applicable including other regulatory requirements there too. This is the original wordings. Now that has been changed to, like what is the wording like it has been now changed to? It has been changed to technical professional ethical standards. Technical professional ethical standards as applicable including audit quality maturity model where applicable, or regulatory requirements as may be prescribed by council or any committee thereof. That old sentence is replaced with new sentence, audit including audit quality maturity model or any other regulatory requirements as may be prescribed by the council or any committee. So this is the wordings which are substituted. Getting it? Now where that will impact? Where that will impact in peer review? That will impact in peer review here. Peer review means what? It's an examination on review of systems and procedures to determine whether same have been put in place by practicing unit. Peer reviewer will come and do review. No, what he will review? He will review, he will verify whether you have established systems, whether you have established procedures, so that you ensure quality of assurance services as required by technical, professional, ethical standards as applicable, including audit quality maturity model, any other regulatory requirements as prescribed by the council or any other committee. That is the word substituted. So peer review definition has been changed. Definition has been changed only to this extent. I'll highlight with yellow color. Only this has been changed. How this has been changed? Earlier, what is this? Technical, professional, ethical standard is applicable, including regulatory requirement. They said no. Now, including here, they added one more. Audit quality maturity model. Are you getting the point? And other regulatory requirements, there too it's the given, right? Instead of that, requirements prescribed by council or any committee. This is the word they added. Able to understand. So peer review, what auditor has to examine? Auditor has to, peer reviewer has to examine whether practicing unit has put in place any systems and procedures for ensuring quality of assurance services so that they comply with technical, professional, ethical standards, including AQMM, wherever applicable, and other regulatory requirements as may be prescribed by the council or any committee. This is the wordings. Getting the point? So this itself can be tested as an MCQ. They will test which of the following is correct. So the peer reviewer has to examine. They may give you peer review means examination of systems, old definition they'll give you. Then they'll give you new definition. By ignoring AQMM, they'll give another definition. By ignoring committees, that council. Then fourth option, they'll give full-fledged proper definition. You need to pick the fourth option. Able to understand? All of you. Next, reviewer means who? Who is a reviewer? Reviewer means a member duly empaneled. A reviewer means a member duly approved and empaneled by board on fulfilling qualification prescribed as per guidelines. They just added as per the guidelines. That's the only difference. Earlier reviewer definition, now reviewer definition, same. Peer review board means what? It's a board constituted by council. What do you mean by council of ICI? In ethics also you will understand. You will get this word council of ICI. You need to get a permission of the council. Council means it's a 40 members council. It's a 40 members council. You see here in the ICA side, you will understand here. Like you go to the committee, you will see the standing committee. You will see here the council of ICI. I think you will see here overview itself. You will find. Yeah, the council. You see. So from western region, these are the council members. From southern region, eastern region, like that you will find. Okay, getting it. Total ICA council is having 40 members. Out of them, 32 were elected from various regions. Getting the point? 8 members were nominated by government. These people are nominated people by government of India. Last. These are nominated from government of India. Able to understand? So totally 40 members. These 40 members put together were called as board of directors of ICA. Able to understand? In a company we will have risk management committee, audit committee, all that. Peer review board is one committee like that. Able to understand? In a company there will be board of directors. Reliance is having 14 board of directors. Now all 14 board of directors will not look into all the operations of the company. 3 directors will look into risk management affairs. 3 directors will look into audit. 3 directors will look into so and so. Some 4 directors will look into so and so. Able to understand? Same way, ICA has various objectives which they need to accomplish. They need to issue accounting standard. They need to issue auditing standard. They need to review their members. They need to check tax audit quality review. They need to form an examination committee. They need to have a disciplinary committee. Various objectives they need to accomplish. So this entire 40 members council will take overall decisions of the institute. Plus these council members will participate in peer review board. Some council members participate in quality review board. Of course, quality review board is not a committee of ICA. Remember, quality review board is an external authority. Correct? All of you. Now, next, So amendment 4, there is another amendment which is added. Branch peer reviewer. What is it? Branch peer reviewer. He is a reviewer. He is a reviewer appointed to conduct peer review of the branch. The qualification and obligation of the branch peer reviewer shall also be same as the main reviewer. So suppose if a practicing unit is selected for review, to that particular practicing unit, institute will appoint a reviewer. Suppose if the peer review board feels one reviewer is not sufficient because the practice unit is having multiple branches in multiple locations. So the peer review board may appoint a separate reviewer for the branch of the practicing unit. Then we call him as what? Branch peer reviewer. The branch peer reviewer and the main peer reviewer shall coordinate here, just like principal auditor and other auditor. Able to understand? Peer review is very simple. Whether company financial statements are true and fair, you are doing audit. Whether are you doing audit properly, peer review is there. Able to understand? Next. Now there is another concept which is added in peer review. New unit. New unit means what? Can we conduct a peer review of the new unit? For new unit, peer review should be conducted or not. There is a separate guidelines. Getting it? Whether new unit means what? Newly started practicing unit, or a practicing unit which has not been rendering any assurance services. It is started long back, but this is an audit firm where they have never done any assurance. They are only doing consulting works. They are not doing any practice. They are only involved in MCOS services. Management consultancy, other services only they are providing. They are not, like there are many firms in India which exclusively render MCOS only. Though they are having practicing COPs, they don't provide any practice oriented work. They don't do any attestation. They don't do any certification. Able to understand? Which is a major, finance, major income for this ES. Getting it? So now what is a new unit? Exam. This can be tested as a direct descriptive question for 2 marks. They may ask you, define the following terms. New unit, branch peer reviewer, 4 marks question, 2 plus 2. Getting the point? Because there's an amendment. So a firm whose date of establishment is less than 12 months immediately preceding the date of receipt of application for peer review. Like the institute want to select them for peer review, right? New practicing unit voluntarily made an application for peer review. Now from the date on which they applied, no. If I look at the date of establishment, it is less than 12 months. And which may or may not have rendered any assurance services in the last 12 months. They might have rendered, they might have not rendered assurance, or it's a practicing unit which is in existence for more than 12 months, but till date no services were rendered, assurance services were not rendered. Remember, peer review will apply only when there is an assurance service. If assurance service is not there, peer review will not apply. What peer reviewer has to check? Peer reviewer has to check whether the practicing unit has established systems, policies, procedures, so that assurance services are provided qualitatively in compliance with technical, professional, ethical, audit quality maturity model, all that. Able to understand? Now scope of peer review has been changed. Inside that, this 4th clause has been added. Earlier this is 4, this is 5, this is 6. Now all these were renumbered because 4th clause was substituted with another. Earlier scope of peer review will have only 6 points. Now scope of peer review is having 7 points, where 4th point was added. Able to understand? Now what is the 4th point? Some audit firms has to do self-evaluation under audit quality maturity model. The practicing unit has to self-evaluate audit quality maturity model. Whether the audit firm is doing self-evaluation or not, peer reviewer will have to check. Able to understand? Now, before I discuss like this piecemeal, first let me discuss overall peer review process. Then I will come back to this and discuss. That will give you more meaningful understanding. Getting it? Now, first of all, what is audit quality maturity model? What is audit quality maturity model? Audit quality maturity model totally has a scorecard of 600. What is the score of audit quality maturity model? Maximum score 600. Inside that, there will be so many points. Audit quality maturity model is divided into 2 or 3 parts: administrative functions and systems related functions, and so and so. Like I think I have downloaded that also earlier. Yeah, it's there. Audit quality maturity model is there. You see here. You see here. What is the total score possible in audit quality maturity model? 600. Now, how you are practicing firm? Doing practice management operational activities. For that maximum score is 280. How your audit firm is good in strategic and functional role. For that 80 marks were allocated. How your audit firm is doing HR management, how you are hiring articles, how you are training articles, how you are hiring audit managers. You might have seen self-regulatory measure in ethics, For every 5 non-qualified assistants, 1 qualified assistant should be the self-regulatory measure. Like that, if you comply, HR management, you will get score. Now, 600 is a maximum score. Suppose, if at all, you scored only 25% in each section. In each section, you scored less than 25% marks. Then you have to immediately upgrade your firm. No competency at all. You will be disqualified for many government audits, many big internal audits and all. See, big IT companies and all, they'll not give you audit based on your just because you're a CA. They will come and see your systems. They will come and see how you are implementing confidentiality rules. Getting it? Suppose if it is 25 to 50, as per audit quality, you will come under level 2 firm where you have made some progresses. You just have to fine tune them. If the score is level 3 score means in each section, nothing but for 600, at least 300 to 450 score you should get. In each section, 50% to 75%. It indicates firm has made substantial progress. So highest level of competency. Above 75, firms just have to maintain and optimizing. They are excellent already. So in audit quality maturity model, if you apply to your firm, wherever you did articles, you just apply this model conditions. Do you have a documented systems and procedures? 90% firms in India don't have. Say more than 60 to 70% firms will fall under 11.1 category, where they describe it is very nascent, very poor. Getting the point? So this is AQMM. Like you can see the questions also in AQMM like this. So you just have to score. Suppose if the firm is reviewed by ICI, okay, scoring, if the answer is yes, 4 points you'll get. Suppose if the firm is not having peer review certificate, 0. Like that, there are so many things. Whether the firm is having engagement quality control reviewer inside the firm. Whether the firm is reviewing audit reports and documentation before signing. Whether you have this condition, within 60 days working paper file shall be assembled. And after the audit has been completed, SA 220 inspection has to be done. Whether audit has been done as per the standards. If the firm is doing all that process, 20 points they will get. If the firm is not doing all that, they don't get. Do you have a file room properly? Do you have a numbered? Is the files numbered? Database numbered? Are you following structured database inside your practice? If you do have a clear-cut client list, separate classification wise, individual clients, corporate clients, and stat audit clients, tax audit clients. If you have a register, if you are maintaining register, you will get some points. You don't maintain register, 0. Do you have training sessions for your articles weekly? Some points. No training, 0. Imagine how many zeros your firm will get where you did articles. Getting it? Next. So, the peer review, scope of peer review, which is very important question. Write about scope. This is which is frequently tested in exam. Scope of peer review. Some 4 marks question is important. What is the scope of peer review? The peer review shall cover compliance with technical, professional, ethical standards, quality of reporting, systems and procedures that are there in the firm for carrying assurance services, and how the firm is evaluating itself with audit quality maturity model, how the training programs are conducted for staff, compliance with directions issued by council to the members, in relating to fees to be charged, number of audits to be taken. There is a minimum scale of fees which is given by ICI, which is a self-regulatory measure. Like for every work that you are doing, you must charge minimum that much fee. If you are charging that much fee, in audit quality maturity model, you will get score, otherwise 0. Getting it? That's why only Big 4 will fulfill AQMM. No other firm in India will fulfill that AQMM points. Next, compliance with the directions guidelines issued relating to articles, relating to audit assistance, attendance, work diaries, stipend payments. Have you maintained work diary in article? No. That means your firm will get 0 for that. Are you getting the point? Like this. Okay. So this is the scope of peer review. What peer reviewer will come and check is these points only. He will check how you are doing audit. How is your documentation? How is your standards? How is the documentation methodologies? Do Do you have a standard checklist? Do you have a questionnaire? How your audit team plans the audit? Do you have a proper planning team? Do you have a risk assessment process? They will check all the standards, each and every standard line by line. They will check whether you complied or not. Like SA 501 says, get a written representation for completeness of disclosures of pending litigations. Where is the disclosure? Show me. Where is the representation? You didn't get that. Zero. Standard SA 501 compliance is zero. Able to understand. Like this, they find all the requirements. This is what happens exactly in peer review. Getting it? Like you might have done some audits, right? Some company clients audits, right? Yes or no? Like, do you have a proper audit plan? Have you taken printout and signed, the partner signed, article who is involved signed and kept in the folder, in the working paper file, physical copy, and soft copy is there in the computer, in the client folder, respective financial year folder? If yes, you will get mark, otherwise zero. In audit quality maturity model. All this is what formally should happen. In all big firms, above medium sized firms, this happens. Practically, this all happens. Getting it? Next. Now you see, peer review, directly I'll discuss about the process first. I'll discuss the process and then I'll come back to the main, again amended part. This entire process is amended. This entire process is amended. In exam, they may ask you only on this. Write about selection of practicing unit and appointment of reviewer. Write about selection of practicing unit and appointment of reviewer. First of all, practicing unit may voluntarily apply for peer review. Example, new unit is there, which has been in existence for less than 12 months. See, suppose I'm a new unit, new practicing unit, but the partners in my firm were highly experts. They have very good connections in the industry. So they want to bring listed company audit. They want to bring listed company audit. They have a ready client is there. Client is ready. But the problem is Code of Ethics clause number 9, gap, schedule number 2, part 1. It says peer review certificate is mandatory to accept a listed company. Mine is the new unit. I have a client ready to give me audit. Listed company, he is ready to appoint me. All the shareholders are ready to appoint me. But the problem is I don't have peer review certificate. If I accept, it's a guilty of professional misconduct, schedule 2. So what? So peer review. So I'm not having this. Earlier, I don't fall under level 1, level 2, both. So I'm not able to accept these kinds of audits. So new unit concept has been defined. Now I will make an application to the peer review board. Sir, I am falling under new unit. Please give me peer review. Please come and conduct peer review. I have established all the policies and procedures. Come, tell your reviewer to review all the things and grant us peer review certificate. Immediately I'll go and accept peer review. Are you getting the point? All of you. Now, entire peer review shall be completed within how many days? 20 days. The peer review process shall be completed within 20 days. Okay. From the date of receiving the application from practicing unit or from the date of notifying the practicing unit about its selection. Now, see, peer review of a practicing unit will be conducted because of 2 reasons. One, as per peer review mandate, you are falling under mandatory category. In such a case, peer review board will notify your firm that you are liable for peer review. Once I notify you, from the date of notifying, 20 days. Suppose you are not liable as part of peer review mandate. As per the applicability provision, you are not liable for peer review. But you only voluntarily applied me. Then from the date of your application, I need to finish peer review within 20 days. It's peer review board responsibility. Are you getting the point? So, once if a voluntary application is received, peer review board shall take that application and come questionnaire. Actually, there is something called application come questionnaire. Once you make an application to me, I will send a questionnaire to you. What is this questionnaire? I will get some details. What it will be there in the questionnaire details? What is your name of the practice unit? How many partners you are having? Date on which you have established? How many staff members you are having? What are the clients that you have undertaken in the last 3 years? Able to understand? Period under review means what? Preceding the date on which I notified you or the date on which you applied for me for peer review, preceding the 3 financial years. What are all assurance services you provided? It may be stat audit, tax audit, internal audit, it may be operational audit, any type of assurance you provided. You have to give me list of all the assurance services you provided. What is their turnover? What is their fees that you charged from them? What is the scope of work? You should give all the details to the peer review board. So that you will submit through what? Questionnaire. Now I got the questionnaire from you because I notified you. I asked you to send the questionnaire. You sent me the questionnaire. Or you applied for me voluntarily. I sent a questionnaire. You have sent me back the filled questionnaire. Now, numbering. Once I received the application from you or once I notify you, I will number it in my records. Okay. For number 1 practice unit, number 2 practice unit, number 3 practice unit, like that register. I have a peer review board will maintain a register of practice units now where they are going peer review. Next. Then once I notify you, once you sent me the questionnaire, once you forwarded me the questionnaire, all that, I will recommend 3 names to you. I will recommend 3 names to you, and I will also recommend your preference. Do you want reviewer from the same state? Do you want reviewer from the same city? Do you want reviewer from the same region? So I will ask, if you want to have a reviewer from different region, you can. It is your choice. Because in peer review, you are only going to bear the remuneration. Peer review board will not compensate. Whereas in quality review board will bear the remuneration of the technical reviewer. In quality review, we call the person who is conducting review as technical reviewer. In peer review, the person conducting review, we call him as peer reviewer. In quality review, we call the firm as audit firm under review. In peer review, we call it as practicing unit. Are you getting the point? Remember, you studied no earlier? Fine. So we will recommend 3 reviewer names, okay, and within 3 working days. So within 3 working days of you sending back the questionnaire to me, no, I need to recommend you. Suppose I am a peer review board, I need to recommend you 3 names of the reviewer. By the way, I will have a list of reviewers, no. They are all empaneled on my reviewers list. How they were empaneled? There is an eligibility criteria. There is an examination which I will conduct. You might have seen a 7 years audit experience, 10 years audit experience, like that points you might have remembered. No. So based on that, so and so chartered accountant registered with the peer review board as a reviewer. Sir, I am eligible for reviewer criteria. So he is registering with me as a reviewer. So I will send 3 names out of my list of reviewers to your practicing unit. You have to select one. So the practicing unit selects one reviewer and inform to the peer review board within 1 working day. Are you getting it? Now peer review board will appoint that reviewer. You selected one reviewer, no? He will be appointed for you. And appointment should be intimated to reviewer also, no? Yes or no? I recommended 3 names. You selected one name and informed me. I appointed that particular fellow for conducting review at your practicing unit. I need to inform to this fellow that you are appointed for so and so practicing unit. So intimate the reviewer by the board about the selection within 2 working days from the receipt of choice of name of the reviewer. Getting it? So practicing unit selected one reviewer. I have to appoint that reviewer and intimate to the reviewer within next 2 working days. Then practicing unit, no, okay, I appointed reviewer. Now earlier you forwarded me, you are practicing unit, you forwarded me a big questionnaire, no, forward the same to my reviewer also, because he is the one coming and doing review. I am not. I took it so that I will see your clients list, all that accordingly I have reviewers. According to the experience of the reviewer, I will allocate so and so reviewer for you. Getting it? So forward the same questionnaire which you forwarded to me to the reviewer. Now the reviewer has to submit a declaration of formality, declaration of confidentiality. Getting it? The reviewer has to submit me declaration of confidentiality before commencement of the peer review. Now the reviewer shall intimate the practicing unit about the visit. Getting it? See, peer reviewer, the person conducting verification of the firm books, nothing but firm audit files. What this fellow has to do? First offsite, before going to the firm, first from offsite, you have questionnaire, all the details, no, evaluate all that, getting it, and inform the practicing unit when you are planning for visit. You need to do on-site visit. Now there is an on-site visit restriction, maximum how much? No, I think 7 days also it's removed, man. I think 5 days or 7 days, 7 days only, no? No, I think it's 7 days only, I think now. For new units, the process has to be completed within 7 days. Just a minute. On-site visit is given here, not beyond 6 working days. Earlier it used to be 7 days. Now they have classified it as 6 working days. On-site visit, the on-site review should not exceed beyond 6 working days. This is important for MCQ. Getting it? Now you see. So as a reviewer, after looking at the questionnaire, I should inform the practicing unit that I am going to come for so and so date. And what are the audit samples I am going to select also I should intimate. I should intimate the practice. You see, you have done audit in the past 3 years for these many clients, no? These are the clients related particular financial year audit documentation, keep it ready. I will come for on-site visit and check. I have only 6 days left for on-site visit. Within 6 days, as much as possible, I will check. So in the meantime, you keep ready all the documentation at one place. So I will intimate. Now, if at all I want any additional information, I will get the additional information. Then I will select the assurance engagement. That's what. After selecting only, I will intimate samples. The reviewer shall, within 2 working days of receiving the information, select assurance service engagements that he would like to review and intimate the same to the practicing unit. This is what intimation of sample also. This is what actually refers to intimation of sample. Then plan an on-site visit. When you plan an on-site visit, at least 2 working days. Time must be given to practicing unit on a prior basis so that they'll make ready every documents. Are you getting the point? Next. Entire review process shall be completed within 20 working days. In case of new unit, entire review must be conducted within 7 working days. Just because of peer review certificate, new unit should not miss the client. So with that objective, this new unit concept has been added and all this is added. Now, peer review visit. So execution. Now you see in examination, they may test you. What is the procedure to be followed by reviewer? They may test you on this. Write about selection of the practicing unit and appointment of reviewer. They may test you on this. So in this, what are the key points? 1 and 2. 4th point. 5th point. And 6th one. That's it. Getting it? Only these points are relevant from exam point of view. You need not write all the 8 points because examination question will be for 4. 4 points only you need to write. For 4 marks, 4 points. Then, what are the review procedures? What is the peer review procedure to be followed by reviewer before commencement of the peer review? Getting it? Now, in this, first he has to submit declaration of confidentiality. He has to intimate the practicing unit about the on-site visit and samples selected. And the review process shall be completed within 20 days. Before visiting on-site, 2 days time must be given to the reviewer, the practicing unit, so that they make it everything ready. And for new units, 7 working days, the peer review process has to be completely done. Now execution. The peer reviewer can do on-site visit where it cannot exceed beyond 6 working days. So that's it. Now they may ask you a question on this also. How selection of assurance engagements will happen? How selection of assurance engagements? Like the practicing unit, no. They are, in the last 3 years, no. They have rendered audit services to A Limited, B Limited, C Limited, D Limited, E Limited, like that 20 companies they rendered services in the last 3 years. Means 60 audits they signed in the last 3 years for companies, stat audits. Now out of these 60 files, which files you will select? How many you will select? It depends on what is the standard of quality control they follow? What is the nature of assurance service? Is it stat audit, tax audit, GST audit, non-stat audit? What? Methodology adopted by practicing unit. Number of partners and members involved. What is the fees charged? What is the GST paid? And what is the number of locations or branches of the practicing unit? Based on all this, the reviewer will fix the sample size. Are you getting it? By the way, this and all generally happens at off-site. This generally happens at off-site. First, reviewer will get a questionnaire. No. In that questionnaire, practicing unit's entire profile is there. So I can study that questionnaire for 1 week to 10 days time. Or since I have to complete within 20 days, maybe 3-4 days. Okay, 3-4 days, he will study only the questionnaire. He will understand what is the practicing unit. Do they have quality control policies? Do they have training methodologies for their staff? So what are the clients they have? What services they rendered? How much is the turnover of each client? Entire that information will be there. How much fees they charge, how much GST this fellow is paying. I understand all this. Based on that materiality concept I will apply and select important audit engagement files by this practicing unit. Able to understand the terminology? Yes or no? Then I will come and do review of records. Review of records means how it is done only on site. I have to go there, I have to physically take the records and then review. First I will see how assurance records were maintained. How records were maintained. What is their file room? What is the file numbering system? Now look at the controls. Substantive test. Financial statements, presentation and disclosure. Assurance service conclusion. Assurance services reporting. This 6th point is not that important. No, don't worry. Now in case of a practicing unit, which is a new unit, no, on-site visit shall be restricted to 1 day only. What he will do within 1 day? Formality sake only. Okay. The reviewer shall thereafter submit a report to the board in the format prescribed by it. Reporting by reviewer. Finally, first, no, preliminary report we will make. The peer reviewer, no, he will examine all your systems, no, how you are working, how you are practicing, all that he will evaluate. Okay, the firm is having a good, decent infrastructure. The firm is having systems. They are having password protected. There is a server room which is there. For every person can use the system only with the login ID. Entire logbook is recorded. Entire confidentiality is maintained. Persons cannot be allowed. Persons are not allowed to access their personal Gmails. Persons cannot be allowed to access social media. This is quality control checking, confidentiality checking. Like this, we will do so many evaluations. Simply speaking, audit quality maturity model, I will read that and go and apply there. That itself is best. Peer reviewer will apply what procedures? The procedures given under audit quality maturity model, same procedures peer reviewer will question. Do you have a system of quality control? Like what is system of quality control? See, in firms, no. Suppose you go and check Big Four, no. How to file ITR1, they'll have a 20 pages document. They'll have a guide, manual. We call them as what? Manual, work manuals. That is nothing but documented policies and procedures. This is an SQC requirement. In SQC, you might have seen establish policies and procedures for ensuring quality of services. Yes or no? So, how to file ITR2? They'll have some 30 pages document. How to file ITR6? They'll have a big document. How to verify purchases? They'll have a document checklist. How they prepared all this? They prepared all these based on IFC manual, internal financial control manuals. They use that manuals and prepare checklist for works. Able to understand. That's why you see people coming from above medium-sized firms and Big Four firms, when they go and do audit of any company, purchases. Okay, wait, I have a checklist for purchases. I'll open. Is there a separate purchase department? Tick. Is there a separate vendor mechanism? Tick. Is there tenders mechanism? Tick. Like this, they'll have question and answers. That is called questionnaire or checklist. Are you getting it? This is a system of quality control. So whether this kind of checklist is there for you to do audit. Are you getting the point? See, the object behind this is very simple. If you are there, if the checklist is there, whether a senior article is coming and doing or a junior article is coming and doing, a fresher is coming and doing, they will have to verify the things as per the checklist. So I will ensure quality. If I don't have checklist, no, I will ask you, have you verified purchases? You will say yes. What you verified? Amount, match, tick. Getting it? How do I know whether you have checked the vendor approval mechanism? How do I know whether you checked purchase order approval mechanism? How do I know that? So if I have a checklist like this, a system of quality control like this, I can ensure, okay, whoever goes to that audit, they will do as per a particular checklist. So I am convinced, I am having assurance that my audit will be conducted as per quality control policies. This is called quality control policy, quality control manuals. Getting it? Fine. I'm not reading, okay? I'm explaining things to you clearly. Next. So first, we will prepare a preliminary report. Then I will have to get a response of the practicing unit within 2 working days. First, peer reviewer, after conducting peer review, will prepare a draft report and send to the practicing unit, and the draft report will also be sent to the peer review board. To both of them, because that is the one who appointed me. I am doing review of the practice unit. I need to send to both of them preliminary report. Now the practice unit has to submit their reply within 2 working days. Suppose if the reply is satisfactory, I will finalize my report and submit the final report to the peer review board. Once I submit the final report to the peer review board, if everything is satisfactory, peer review board will issue a peer review certificate. And the certificate is valid for 3 years. The certificate is valid for how many years? 3 years. Earlier, no. The certificate is valid for level 1 firms 3 years, level 2 firms 4 years, like that it is there. Now there is no such thing, level 1, level 2. Straight away now the valid peer review certificate is valid for 3 years. Suppose if unsatisfactory, I will give a qualified report. Then review of report by peer review secretariat. There is something called between peer review board and between peer reviewer. There is a secretariat which is established now. This is purely to assist the board. This is something, a similar concept to quality review group. In quality review, there is a concept called quality review group. Okay, I'll come back to it. I'll come back to that after finishing this and I'll explain you. Getting it? So there is a peer review secretariat. You submit preliminary report, final report, response of practice unit, all that, right? Okay, the peer review secretariat will just go through all the reports, all the reports furnished to him, furnished to the secretary by the peer reviewer. The secretariat department, secretary will be there, peer review secretary will be there. That secretary will take a report from you, he will evaluate everything and recommend it to the peer review board. Yes sir, fine sir, everything seems good, you can issue certificate. Able to understand? So peer review secretary is to check procedural formalities of the peer review process. Whether all the procedural formalities were correctly done or not, he will just check the administrative process. Are you getting it? Next. Now finally, issuance of peer review certificate. Okay, so in case of an unqualified report issued by peer reviewer, the secretary shall place the report before the peer review board for consideration and issuance of peer review certificate to the practicing unit, but only after peer reviewer confirms the fees received from practicing unit. So practice unit has to pay the fee for peer review, no? Only after reviewer confirms that yes sir, I received fee, then only certificate will be issued to you. Getting it? This is the one side of income for the members. One income created by, one revenue created by institute. Same way, new units also, peer review certificate shall be issued as per the peer review guidelines for new units also. Suppose if it is a qualified report, no, peer review board will not issue peer review certificate and along with the reasons. So in that case, peer review board will issue a follow-on review guidelines. Will order follow-on review. Now, what is the validity of peer review certificate? 3 years from the date of receipt, receiving the report. New unit, board will decide. For new units, for how long the review certificate is valid, board of peer review board will decide. In MCQ, they may ask, for new units also, peer review certificate is valid for 3 years. Wrong. Getting it? Now, if for any reason, the certificate's validity can be extended. In the COVID time, for almost all the practice units that are there in India, peer review certificate is extended for 1 to 2 years. In the COVID time, because peer review processes was not conducted, because lockdown was during April, May, June. Getting it? So, this is the process of peer review. Are you clear? All of you? Now, let's look at next. So next one, what are the practicing units that are liable for peer review? First of all, how many ways peer review is applicable? One is mandatory, another voluntary, another special case where disciplinary director referred, getting it to the peer review board. So once a practicing unit, we are somewhat doubtful about their affairs. Peer review board, can you please initiate peer review on them? That is called special case peer review. And mandatory peer review. Mandatory peer review is as per the peer review mandate. Voluntary means only voluntarily applied. Example, new units. Getting it? Now, peer review mandate has been issued. Peer review mandate has been issued. As per the mandate, if you want to accept audit of listed entity, with effect from 1st April 2022, you must have a peer review certificate. With effect from 1st April 2022, if you want to do audit of listed entity or an entity which is in the process of listing, nothing but listed entity, proposed listed entity or listed entity, you must have peer review certificate in hand. Otherwise, your firm is disqualified for becoming an auditor of the listed entity. So, whenever I say mandate, no, this mandate is applicable in 5 phases. This mandate is applicable in 5 phases. You see. Sorry, 4 phases. This mandate is applicable in 4 phases. As per the 4th phase, no, which is applicable from 2025, 1st April 2025. As you know, with effect from 1st April 2025, if your firm is having 3 or more partners, if your firm is having 3 or more partners, you must have a peer review certificate. It's mandatory now. In such a case, only if you can accept audit of a PSU, public sector bank, audit of a PSU bank, audit of a public sector bank, that is not central audit, only branch audit. If at all you want to accept branch audit of a public sector bank with effect from 1st April 2025 and your firm is having 3 or more partners, peer review certificate is mandatory. Nothing but peer review is mandatory. Are you getting the point? Now, phase 3 with effect from 2024, if your firm is having 4 partners or more than 4 partners, you must have peer review certificate. You must have peer review certificate. Or if you want to conduct statutory audit of entity which has raised funds from public or banks or financial institution for over 50 crore or from any body corporate including trust which are covered under public interest entities. If you want to do stat audit of an entity which has raised funds from public more than 50 crore, or you are treated as a public interest entity, you want to do audit of an entity which is a public interest entity, we call them as PIEs. You want to do audit of public interest entity, or you want to do audit of an entity which you borrowed for more than 50 crores from banks, FIs and general public. If you want to do audit of them with effect from 1st April 2024, you must need peer review certificate. That is one criteria. Another criteria, even if you have 4 or more partners also, you must have certificate. Very simple. Let me be even more simple. Phase 3 will apply from which year? 1st April 2024. Now, which firms will fall under phase 3? 2 criteria they give. 2 criteria they give. Under phase 3 they give 2 criteria. Under phase 4 also 2 criteria. Even under phase 2 also 2 criteria. Only in phase 1, 1 criteria. Getting the point? Phase 2, phase 3, phase 4. Which firms are liable for peer review? In each of the phase, they give 2 criteria. One criteria is based on what you are auditing. Another criteria is based on how many partners you have. If you fulfill any criteria, you fall under that phase. Getting the point? Example, you see phase 3. Suppose you see phase 4. Suppose I am doing branch audit of a public sector bank. I will fall under phase 4 because of the criteria 1. No, I am not having bank audits, but my firm is having 3 or more than 3 partners. Then also I will fall under phase number 4. If I fall under phase number 4 because of any of these criteria or both the criteria, whatever, I must have a peer review certificate because I fall under phase number 4. With effect from which date I must have peer review certificate? 1st April 2015. Suppose, what if I do not have peer review certificate? What is the consequence? I cannot do branch audit of PSU, public sector bank. I cannot do bank audit of public sector bank. I cannot do public sector bank audit. Getting the point? Because no, if you fall under phase 4, it's a prerequisite. What is it? It's a prerequisite for you to have peer review certificate in order to accept PSU audit, PSU bank audit. Branch, that too branch audit only, not central audit. Central audit means most of the banks are listed. Listed means they come under phase number 1. Are you clear? Same way, phase number 3 has given 2 criteria. If at all you are doing statutory audit of an entity, if at all your firm is doing stat audit for an entity, that entity has a borrowings from banks, FIs, public for more than 50 crore, or you are doing audit of an entity which is a trust or which is an entity which is a public interest entity, then you fall under phase 3. Sir, I am not doing any of these kinds of audit. I don't have any client who is having more than 50 crore borrowing. I don't have any client who is a public interest entity. Okay, tell me, do you have 4 or more partners? Yes, sir. Then you fall under phase 3. Are you getting the point? Then you fall under phase 3. Okay, what a big deal. If at all you fall under phase 3, if you want to accept any entity audit whose borrowings are more than 50 crore, you must have peer review certificate. Without that, with effect from 1st April 2024 on until they see, right now you may have a client who is having 100 crore borrowing. You do not have peer review certificate. Now there is no problem. But with effect from 1st April 2024, if you want to continue with this client again, Getting it? Get a peer review certificate by 1/4/2024. Otherwise, you have to withdraw here. If you don't withdraw, what happens? Non-compliance with gap. Schedule 2, Part 1, Clause number 9 offense. Getting the point? Next, Phase 2. What is Phase 2? Are you doing an unlisted public company audit? Which unlisted public company whose paid up capital is minimum 500 crore or turnover is 1000 crore or loans, deposits, outstanding, everything is minimum 500 crore? If yes, then you fall under Phase 2. Sir, suppose I don't have a public limited client at all. Do you have 5 or more partners? Yes, I have 5 or more partners. Then you fall under Phase 2. No, I have only 4 partners. Then you fall under Phase 3. I have only 3 partners. You fall under Phase 4. Able to understand? Don't mug up. If you read that later, you will understand better. Getting it? Now, suppose if you fall under Phase 2, no. Within a week, 1st April is starting. Another 3-4 days, we are going to start with the next financial year. 1st April 2023 onwards, if I want to accept any PSU audit, public entity audit, public company audit, sorry, not PSU, public company audit, public limited company audit, whose borrowings were exceeding 500 crores or turnover is 1000 crore or capital is 500 crore, I cannot accept if I don't have peer review certificate with effect from 1st April 2023. Clear? Now, Phase 1, listed entities. If you want to do audit of listed entity, peer review certificate is mandatory as per peer review mandate with effect from 1st April 2022. But this requirement was there in the SEBI guidelines in 2009-10 itself. If any practicing unit want to accept listed company audit, they must have a peer review certificate. This is SEBI regulation which was there in 2009-10 itself. Very clear. Got an idea? That's it. So this is about applicability of peer review. For all the above cases, it's a prerequisite of having peer review certificate before accepting any statutory audit falling under that phase. Getting it? Now, peer review period means what? 3 financial years preceding the year in which practicing unit is selected. So, for how many years we do peer review? We selected in 23-24 year. Suppose today I got peer review notification from the institute for my firm. Exclude this year. Last 3 years were there, no? 21-22, 20-21, 19-20. All the 3 years will be selected for peer review coverage. The reviewer will come, no? Whatever the audits I signed in the last 3 years, any audit you can select. Any number of files you can select. But for him, 6 days only time available for on-site visit. Able to understand? That's it. This clarification is not required. Now you see here, eligibility of a peer reviewer. Just eligibility point if we discuss, we can close this topic. Eligibility of a peer reviewer. Just 1 minute, 2 minutes gap, okay? How many of you have gone through peer review chapter earlier? Almost, right? So that you are able to connect Yes, shall we write about eligibility of a peer reviewer? In order to become a reviewer, what should be the eligibility? See, you are going to review a practicing audit firm, how they are doing audit, which means you must know how to do audit. Correct? Which means what is required is for you hands-on experience is required. So that is what is reflected here. You must be a member in practice with at least 7 years of, they substituted the word here, assurance practice experience. What is it? Assurance practice experience. Instead of using the word audit experience, they use the word assurance practice experience. This is the only amendment in this question. If you are in practice, you are a member in practice having at least 7 years. In the past 7 years you are in practice, then you can empanel yourself on the institute website. In the peer review board panel of reviewers, you will be conducted an exam. You will be given training how to do review, all that. Then only you will be empaneled onto the final reviewer list. Getting it? Suppose, sir, I am a member. No, I am a member of the institute. Earlier I worked in industry. I am not having COP. Now I am having COP. Are you getting it? So, and you are now currently in practice. Then you must be working in the industry in the past 10 years. Plus already 3 years of audit practice is also completed. Which means you must be having 13 years experience. You must have qualified at least 13 years before. When, if at all you are not in practice from the beginning of the career. So if at all you are not in practice from the beginning of the career, now I turned into a practicing, and now I turned into practice. Now can I become a reviewer, or for me also 7 years I should wait? Getting it? No. If at all you worked in the industry for the past 10 years, now you started practice, 3 years already completed, enough. You are eligible for reviewer. Are you getting the point? All of you. Next. And you must undergo training, and you must clear the peer review test conducted by peer review board. That's it. And you have to give declarations, all that. Disqualifications of a peer reviewer. This is also important for 4 marks question. Getting it? You are disqualified to do audit of the practicing unit where you did articles. Getting it? So you cannot go and do peer review of the firm where you did articles. Then, or if the, like, a member shall not be eligible for a reviewer if any disciplinary action is pending against him, or you are guilty of professional or other misconduct by the council at any time. Once you were treated as guilty, forever you are boycotted from peer review. Whereas in quality review, 3 or 4 years only the limit was there. Getting it? Suppose institute have taken disciplinary action. Once disciplinary action is completed, you can again become a technical reviewer in the quality review board. Okay, anyhow, I'll come back to that later. Or you are convicted by a court for an offense involving moral turpitude, and you are punished with imprisonment. Then also you are disqualified from becoming a reviewer. You or your partners or your personnel has a conflict of interest in the practicing unit. So some practice unit selected your name, no, but you are having conflict of interest. Family relationship is there, or some other relationship is there. Then also you are disqualified. Now you may get a doubt, sir, what if the reviewer did not disclose this? If you submit a false information to the institute, professional ethics, part 2, guilty, yes or no? That's it. Now next there is one more thing. Once you are appointed as a reviewer for a practicing unit, we see 2 conditions. Before you accept appointment, tell me, do you know this practicing unit in the past 2 years? I know. If you know, that's fine. Have you associated with them in the past 2 years with any respect, any work? Have you associated on any work with them? No, I don't have any work association with them in the past 2 years. Fine. After completing review, don't associate with them for the next 2 years also. So before doing the review 2 years, no association should be there. After completing the review, next 2 years, association should not be there. Are you getting the point? Understood? Suppose one firm outsourced me one work in the last 2 years. Coincidentally, to the same firm I am appointed as a reviewer. Since in the last 2 years, their work one is outsourced to me, right? Which means we had an active association in the past 2 years with respect to some work. Getting it? I am disqualified to do audit of that firm. Once I am disqualified to do peer review of that firm. Once I completed the peer review, next 2 years also I should not take any work from that firm. Able to understand. You know, right? Firms can outsource works to another firms. That's it. Next. Now, can the reviewer take help of a qualified? Can the reviewer take along with him assistants? Yes, you can take only one assistant who should also be a chartered accountant, and who must be either your partner or your employee. But he must be CA, and he must be associated with your firm as per the records of the institute. Able to understand? All of you. So that's it. Peer review major topic is covered. Major almost main gist of amendment is covered, and also eligibility of the peer review topic is covered. Important questions were covered. Are you confident? Scope of peer review is important. Peer review process we covered. Peer review certificate we covered. Validity point we covered. Eligibility we covered. Applicability of the peer review for the practicing units we have covered. Clear, all of you? Amended part understood, right? That's it. Next we have quality review. Can I proceed? So this is with respect to a newly added topic, that is Noclar concept in Code of Ethics. Nothing but in our syllabus as part of Professional Ethics chapter. So in our book it is 4th chapter. Professional Ethics is 4th chapter. In that edition 2022, question number 4. Now, what is the concept of Noclar first of all? What is the concept of Noclar first of all? Non-compliance with laws and regulation. Very simple. Non-compliance with laws and regulation. NOC means non-compliances, not no objection certificate. Okay. So non-compliances with laws and regulations. What are the objectives of professional accountants? What are the objectives of professional accountants? See, they didn't use the word chartered accountant. They used the word professional accountants. But it's okay. The Code of Ethics of ICAI is generally applicable to chartered accountants. To whom? Is it only a chartered accountant in practice or a chartered accountant in service? To whom? To both of them. So professional accountants includes both chartered accountants in practice and chartered accountants in service. What do you mean by a chartered accountant in practice? What do you mean by a chartered accountant in service? First of all, what do you mean by a chartered accountant? You will understand in the upcoming question. We have upcoming question called membership of the institute. So there you will understand. There you will understand. And I strictly advise you to watch this video if possible. Watch this video after finishing professional ethics chapter remaining videos. You have remaining totally in the entire professional ethics. We have so many videos, right? So many concepts, right? Yes or no? We discuss about schedule 1, schedule 2, all the parts, clauses, council guidelines, everything. After finishing all that, you please come back and watch to this video. Since it is question number 4 in our material, I'm discussing here itself like a part 2A video for edition 22 students. Though it is part 2A, do not watch this video at this moment. You can pause, you can stop the video, go with other lectures, finish all that and then come back to this. Why? In this Noclar concept, we are going to discuss about some clauses of professional ethics which we will be discussing in the upcoming videos. So it is better if you discuss to this particular, if you watch this video, okay, at the end of all other chapters, at the end of all other videos. Fine. So this is applicable for all professional accountants, whether the professional accountant is a chartered accountant in practice or whether the professional accountant is service. What do you mean by Noclar, by the way? Non-compliance with laws and regulations. Tell me, first of all, where do we heard this word called non-compliance with laws and regulations? Where do we heard this word laws and regulations majorly? First time we discussed that laws and regulations point under SA 250, if you remember. The 3rd chapter in our subject is what? Standards on audit. Yes or no? So in the standards on audit, I think you have gone through SA 250. What is SA 250? Consideration of laws and regulations in an audit of financial statements or auditor's responsibilities relating to laws and regulations in an audit of financial statements. If you recap, What SCA 250 divides, what SCA 250 expect from the auditor. First of all, to whom SCA 250 is applicable? Only for statutory audit of financial statements, only for audit of general purpose financial statements. One of the standard is SCA 250. And SCA 250 applies only in the context of audit. SCA, standard on audit, only it is applicable in the context of audit. Then what is non-compliance with laws and regulations, Noclar? How it is different from SCA 250? SCA 250 puts responsibility on auditor. Dear Mr. Auditor, if there are any laws and regulations where there is a non-compliance and if it directly affects the financial statements, please look into it. No, it is not affecting directly laws of financial statements, but it might affect company going concern, or it will bring material penalties and fines which will have an impact at a future date. Then also please consider, if SCA 250 indirectly says, dear Mr. Auditor, if any non-compliance you discover that will affect our client, that will affect your client, that will affect your auditee, that will affect the company where you are the stat auditor, please consider. That is what the scope of SCA 250. But Noclar, it doesn't define, Noclar defined stakeholders much more wider. It is not only the client, it is not only the management of the company, it includes creditors, it includes tax authorities, creditors, okay, general public, it even covers general public. Dear Mr. Professional Accountant, whether you are an auditor for the company as a chartered accountant in practice, whether you are a just employee of a company, chartered accountant in service, whatever it is you, if you came across any non-compliance with law and regulation that affects any of these, check, are you liable to report to any legal authority? Do you have any obligation to report to any legal authority? It may be a duty casted upon you under employment, or it may be a duty casted upon you as an auditor of a company. Check. Do you have any responsibility to communicate to the appropriate regulatory legal authority to communicate this non-compliance made by your employer company or your client? Check it out and accordingly report to the law and regulatory. When the company has done some non-compliance, the company has committed some non-compliance, the management has committed some non-compliance, the employee of the company has committed some non-compliance, I am the auditor, or I am a chartered accountant, I am a professional accountant, maybe an auditor or maybe employee. Because of this act, non-compliance, because of this non-compliance with law, it resulted in damages for either the company or the management or the creditor or the tax authorities or the general public. SCA 250 do not talk about general public. SCA 250 do not talk about damages to creditor. SCA 250 do not talk about damages to tax authorities. SCA 250 only talks about if a non-compliance is resulting in financial statements of the company being affected or the company being affected at a future date in the form of fine or penalty. Only if the company is affected because of some act, non-compliance with the law, then only auditor has to look into. In SCA 250, the law and regulation, non-compliance related information we should only see, keeping in mind the beneficiary only company. Whereas Noclar, as per Code of Ethics of ICI, considers considers stakeholders at large. Stakeholders at large. SEA 250 only talks about the company client, whereas Noclar talks about all the stakeholders, whoever might affect. Example, in SEA 250 also I gave this example. Suppose if a pollution norm is breached, suppose I'm a statutory auditor of a company, I'm a stat auditor of a company. Let us assume I visited the factory and workers are discussing about a pollution breach. There is a standard, pollution emission standards, some pollution emission standards for their example. The workers are discussing about, something I heard in the discussion when the workers are discussing, when I'm passing by, I heard from few workers discussing about some pollution breach of emission norms. I spoke to them, what happened? That they explained, because of that pollution breach, or because of some sort of, it may be air pollution or water pollution, whatever the sort of pollution, because of that, it is endangering some animal species residing in the nearby locality. It will endanger. So that pollution causes harm to that endangered species. You see Robo 2 movie. This one you would have seen, no? Pakshi Raja. He will just attract all the mobile phones, everything, to curb the radiation. Yes or no? Because radiation is affecting the birds and all. That is why he is called as Pakshi Raja. Similarly, in the factory where you are doing audit, in the process of just visiting the factory, visiting factory visits, you came across about emission breach. Because of that water pollution or water contamination, whatever being done by this company, that there is an endanger for some particular animal. It comes under public safety. See, the animals are being preserved. Endangered animals are being preserved because every animal in this universe have its own role, to protect to balance the environment. Okay. So you heard about it. Now that particular pollution contamination, water contamination will violate some forest law, or it will violate some protection of animals, cruelty, something. There is a law. It is violating. So I immediately got this doubt. Oh my God. Earlier when I'm doing audit, if I come to know about this, it's okay. Because of factory, everything happens. What we can do. Now immediately I'll think, is it affecting financial statements directly or indirectly? I'll immediately think of it. No, there is no effect on the financial statements directly or indirectly at present or at a future date. No, nothing, no responsibility under SEA 250. But now, with effect of Noclar, since it is affecting, since it is affecting some general public safety, it comes under general public utility. Immediately, what should I do as per Noclar rules? First I must call a lawyer, or I must call industry technical people. I'm working in an industry. I need to go to the nearby any conservative activist, social activist, somebody, some lawyer will be there, or some legal person will be there. Consult legal person. Dear legal person, so I'm doing audit of this company. There is a Noclar concept is there. I need to report to regulatory authorities. Just first of all, I heard about this issue. So explain that issue to the lawyer. He will open that particular relevant law, that animals law or some protection law, forest law, something he will open. He will refer. In that particular law, if there is a responsibility, getting it, directly or indirectly casted upon the accountant of the company, professional accountant of the company, he may be an auditor, he may be or somebody, employee. If there is a direct or indirect responsibility, now you have to report to the concerned people, concerned authority, forest department or environmental department. You need to report, you need to complain. But I'm telling you, 99.99999% of the cases, no other law talks about professional accountants reporting responsible. Logically speaking, Noclar will not have any effect. Right now it will not have any effect, but in future the laws and regulations may be made in such a way. Maybe when an industrial law is being designed, tomorrow when the industrial law is going to be amended, they may put responsibilities on the accountants. They may put responsibility on the auditors. As part of audit, you not only look into the financial aspect, but look at non-financial aspects also, which is affecting general public. If you come across any such situation, please report it. They may put a responsibility like that, but today it is not there. But tomorrow it will come. Noclar is a provision designed and implemented by ICI through Code of Ethics, not for the past or present, but for the future. Understand this point. For the future, getting it right now, Noclar may not have much effect. I'm telling you, because of implementing Noclar. By the way, sir, from when Noclar is implemented, 1st April 2022 onwards, Noclar is implemented. First of all, this Noclar concept is brought by International Ethical Standards Board in 2017 itself. Later, ICI adopted in 2019 Code of Ethics. It is implemented from 1st July 2020 onwards. Implemented the Code of Ethics. This Noclar provision is applicable from 1st April 2022 onwards. This information is not required, even it is not given in the ICI study material as well. I just gone through some Bombay Chartered Accountant Society site, all that, and got this data. So right now it is not required. The dates and all not required. But remember only this, Noclar is applicable for professional accountants from which date onwards? 1st April 2022 financial year onwards. Even up to 31st March 2022, it is not applicable. And for the first time, Noclar concept is applicable from May 22 examination onwards. May 22 examination. You know, I explained entire concept, actually speaking. Entire Noclar concept is explained. What is Noclar concept? Now let me sum up right now. SCA 250 is there earlier. Even now it is there, SCA 250. As per SCA 250, what is our responsibility? Our responsibility is, if auditor come across any non-compliance, which may be a type 1 non-compliance, which will have a direct effect on the financial statements, type 2 non-compliance, which will have an indirect effect, which may not have an effect on the financials, but it will affect the company at a future date in the form of penalty or fine. What auditor has to do? Communicate with those charged with the governance, tell them to disclose that in the financial statements. If they didn't disclose, you report it. You give a modified opinion. Simple. If there is any non-compliance you identified which affect the company. But today, because of Noclar, you have another responsibility, additional responsibility. Even though company may not be affected party, because of a particular non-compliance, company may not be the affected party. Some general public is affected party, a creditor is affected party, a tax authority is affected party, or some other person is an affected party. Even this has to be reported to the appropriate authority as per the appropriate law, after taking legal opinion from the concerned lawyer, whoever is dealing in that issues. Actually speaking, Noclar is not such easy topic. It's a very big topic. Here, confidentiality requirement, should I report or not? See, here it is just like that. Suppose if there is a example, let me explain you what reporting responsibilities we have right now. Which non-compliances we have to report right now under company law. Let me first explain you. Suppose you take Caro as part of audit report. In the audit report, under which section of the audit report on legal and regulatory requirements section, if any fraud is noticed or reported, yes or no? If any fraud is noticed or reported on the company or by the company, it shall be reported in Caro, yes or no? If any fraud is, for more than 1 crore is discovered by the auditor at the time of audit, it shall be reported to central government. There is a clear responsibility on the auditor. Company law has put a clear responsibility that please report in the audit report, please disclose in the audit report. And this is also, please report to central government and disclose this also in the Caro fraud clause. Yes or no? Public deposit in Caro, if there is any non-compliance of Companies Act, RBI directions or NCLT or Company Law Board directions, please report that non-compliance also. They put a specific provision that you need to report it. Here you need to report to central government. Here you need to report to shareholders in the Caro. Statutory dues, is the company paying regularly? If not, if there is a non-compliance, report it. Preferential allotment, whether the company has raised any money by way of preferential allotment, report if there is a non-compliance of section 42. So, Companies Act has put some responsibility. Like I took only these examples because we discussed all this already. As part of audit report chapter and company audit chapter, we discussed it already. So I'm mentioning these examples. I'm not taking other examples. Same way, in listed companies, in company law and allied laws paper 4, you would have discovered, you would have understood some other reporting responsibilities for auditor to SEBI. LODR regulations, where you may have to comply, where any non-compliance over that you may have to report to SEBI. In case of a bank, you may have to report to RPI. In case of insurance, you may have to report to IRDA. There are some responsibilities under some laws and regulations that were casted upon you to report to the appropriate authority. Getting it? So, what Noclar concept is trying to tell, generally, whenever we come across some issues that are there in the employer organization or some issues in our client where we are acting as auditor, we generally maintain confidentiality. We will not report any issues to the outsiders. However, if there is a legal requirement, if there is a regulatory requirement, then you must report. A few examples I discovered. I discussed here. In all these cases, no, if the company is affected party only, please report. Indirectly, that is what they are saying. Indirectly, it is what saying. By the way, here, who will do this non-compliance here? Who will do this non-compliance? Obviously, company is an artificial person, man. Partnership is an artificial person. Partners, staff, employees. So in a company, those charged with the governance, they may do non-compliance. Remaining management people may do non-compliance. Employees may do non-compliance. Persons inside the company may do some non-compliance. That will affect the company or third party, anybody. And you are the auditor of the company or you are the employee of the company, but you are a chartered accountant. For you, code of ethics of icai is applicable. Getting it? Because Noclar says Noclar is applicable for practicing chartered accountants and as well as members in service, for both of them. If you come across any non-compliance, first and foremost thing, don't ignore. Think, do you have any legal responsibilities? Do you have any legal responsibility to report about that non-compliance to somebody? Do you have any legal responsibility to report that non-compliance to some legal and regulatory authority? Check it out. Go to a lawyer, consult, take a legal advice, go to an advocate and take an advice. Then accordingly act. Irrespective of reporting to legal authority, report whatever non-compliance you came across to the top management of the company. Report it to the top management of the company. If that non-compliance comes within SA 250 purview, report it in the auditor's report. Summary is this. The summary of whatever we discussed until now, simply speaking, whether you are a chartered accountant in practice, whether you are a chartered accountant in service, when you are doing audit, when you are working in a company, you came across some non-compliance that affects somebody. This non-compliance definitely committed by company people only, nobody else. Outsider cannot come into non-compliance, company people only. If it is affecting somebody, stakeholders at large, check, do you have any legal responsibility to report? If there is a legal responsibility to report, report it. How do you know whether do you have a legal responsibility or not? Consult with a lawyer. Consult with a lawyer. Pharma companies, defense companies, defense production related companies, pharma companies, telecommunication companies, this Noclar is very, very powerful. The auditors of these companies, telecommunication, pharma, chemical manufacturing companies, this Noclar is very powerful because these are the companies which will cause huge damage to environment. Huge damage to environment. In all these cases, Noclar will apply. Noclar will cast you a responsibility. But right now I'm telling you honestly, my personal opinion, because of this Noclar right now, it may not have huge impact on our work procedure, work method, or our way of working relating to laws and regulations. Whatever is there under SA 250, we only do that. We don't do any additional work. We don't do any additional work. It is just that Noclar is added. It is saying you have to report to appropriate authorities after seeking a legal advice. That's the only difference. Fine. Let us get more clarity by understanding what is the provision of Noclar. So first of all, applicability of Noclar. Actually, Noclar is applicable for all assignments. Originally speaking, as per the code of ethics, it is applicable for all assignments. It is applicable for members in practice as well as members in service. Sir, what do you mean by member in practice? What do you mean by member in service? You will understand in the upcoming video. That is why I asked you to watch this video after finishing entire ethics chapter. Fine. However, right now, as of now, the institute restricted applicability of Noclar to listed entity audits only. And moreover, it is applicable to employees of listed entities who are also chartered accountants. Here, he is also a chartered accountant, and here also audit of assignment means CA. He is also a chartered accountant in practice, but this fellow is a chartered accountant in service. Only for listed entities, wherever you are dealing with. Wherever a chartered accountant is dealing with a listed entity, either as a practicing fellow, all assignments, getting it? So this is applicable. Moreover, right now audit assignments only covered, ma. Right now it is audit assignments. At present, for listed entities, audit assignments only covered, and the listed entities, employees who are chartered accountants only, Noclar provision is applicable. Logically speaking, even if you read this entire question, if at all you read this, you understand basically nothing. What auditor has to do? You will not get a concrete conclusion. But right now I told, right, what is the intention of Noclar? I told you the intention is very clear. Generally, if auditor come across any non-compliance that affects the company directly or indirectly on the financial statements, that we need to report. That is SA 250. Now Noclar says, irrespective of the affected party, do you have any reporting responsibility? Do you have any responsibility to complain to somebody? Okay, so as per some other law, check it out, get a legal advice, and then complain. Logically speaking, right now, no other law has brought a responsibility. Suppose if a particular law says, any person whoever come across this, as a citizen of India shall report it to appropriate authority, if at all it says. Naturally, citizen of India or resident of India includes auditor as well, right? Generally. So naturally, you may have responsibility to report it. Breaching confidentiality requirement. You need not consider confidentiality and all there. And moreover, in future, we have a category 2 chapters, right? Like what are the category 2 chapters? Liabilities of auditor, okay, audit and fiscal loss, and insurance audit. These are category 2 chapters, I told you. Now in category 2 chapters, liabilities of auditor, there is a chapter, liabilities of auditor, where we are discussing about completely what are the auditor's responsibilities under income tax law, under GST law, under company law, what are the audit responsibility we are discussing. There, once again, I will connect SA 250, Noclar, and liabilities of auditor put together. We have to discuss. Put together. So once again, I will cover Noclar there. You will get even more clarity when we discuss about liabilities of auditor. Right now, this level of understanding is enough. Now, what is Noclar meaning? What do you mean by a Noclar? You see here, what do you mean by non-compliance with laws and regulations? Non-compliance with laws and regulations comprises, what it comprises? It comprises an act. Some act you did. How you did? You omitted or you committed. Intentionally or unintentionally. What is that activity? That activity is contrary to the prevailing laws and regulations committed by a client. Means if you are a chartered accountant, okay, or your employing organization, those charged with governance, management, other individuals working for under the direction of the company, nothing but other employees. The organization where you are working as a chartered accountant, or the organization where you are conducting audit, especially that organization right now is what? Right now that organization must be what? Listed entities only. Right now Noclar is applicable for listed entities. If any of those charged with governance employees have committed some act against the law, either intentionally or unintentionally, we call it as non-compliance with laws and regulation. This itself can be asked as a 2 or 3 marks question, theory question, highly important for May 2022 and November 2022 attempt. This itself can be asked as a straight question. Write about non-compliances with laws and regulations as per Noclar Code of Ethics. Non-compliance definition is given even in SA 250. What is SA 250 non-compliance? Non-compliance, SA 250, it just defined non-compliance. Non-compliance means an act which is an act of omission or an act of commission which is contrary to the prevailing laws and regulations. That's it. They just put up to that. Committed by employees, those charged with governance, other that and all they didn't discuss. But anyhow, the definition of non-compliance with law and regulation is mostly similar. And what this do not include, Noclar does not address personal misconduct unrelated to business activities of the client or employing organization, non-compliance by parties other than listed out in the definition of Noclar. Suppose if a third party did some non-compliance where company is also an affecting party, that is not covered in the Noclar. Only Noclar provisions are applicable only when the management, the employer, or those charged with the governance of the company is involved in that non-compliance. And moreover, it do not involve personal misconduct. Suppose if the employee of the company met, in his some personal affairs, getting it, he did some non-compliance against some other law, some law or regulation under Indian Penal Code, that is not affecting the company, no. So you need not worry about that. Only if that is a non-compliance committed by employee, management, top management of the company, affecting the company or any other person. But it is as part of company, on behalf of company, they did that non-compliance, then only this provision is applicable. What are the examples? International Ethical Standards Board Authority gave the following examples. Fraud is covered in Noclar. Corruption is covered. Yes, if you come across any corruption, if the company is paying any corruption, if a company is paying any bribe, which is against anti-corruption law, okay, or bribery, money laundering, terrorist financing, proceeds of crime, securities market and trading, banking and other financial products, data protection related frauds, environmental protection, I told you, animals, all that, public health and safety, tax and pension liabilities and payments, every type of fraud is covered, you see. Every type of non-compliance is covered. See the effect. See, with respect to environment protection in India, we might have more than 100 laws. With respect to public safety and health, we might have more than 100 laws and regulations. With respect to data protection, we have Information Technology Act example. We have many other laws, privacy related laws, banking laws. We have n number of laws. Tell me, is auditor, first of all, no, by looking at this, you can understand, sir, these laws and all regulations, we don't know, right? Should we read all these laws? And suppose I'm doing audit of pharma company, sir. Should I read all the laws and regulations related to pharma company? They clarified below. They clarified, hey, Mr. Auditor, expertise of laws not required, man. You need not require expertise of law. Then what, sir? In the course of audit, in the course of your employment, if you come across any symptoms, indications, then investigate. That is what even SA 250 also says. So, a professional accountant is expected to apply knowledge and expertise and exercise professional judgment. Only whatever your existing knowledge is, that's enough. He is not expected to have a level of knowledge of laws and regulations greater than that which is required to undertake that audit. But for that particular work, for that employment, whatever level of knowledge, whatever the knowledge of law and regulation that is generally expected from you, beyond that, you need not learn. Whether an act constitutes non-compliance is ultimately a matter to be determined by court, other appropriate adjudicative body, not by you and me. That's why, is it a non-compliance or not? Go and take a legal advice. Matters that are clearly inconsequential or relating to personal misconduct, pertaining to business activities of the client are not covered, not relating to actually. Okay, relating to personal misconduct. Relating to personal misconduct, while conducting business activities, but actually the employee has committed a fraud, cheated a customer, getting it, cheated a customer in his personal capacity using the name of the company, that cannot affect the company. That cannot affect the company. Getting it? Inconsequential means immaterial. They're not of material size. They're not of material size. They're not significant. And further, if the law says disclosure is not required, suppose if you come across any non-compliance, you need not disclose. If there is no specific requirement under law that you need to disclose that non-compliance to the appropriate authority. Suppose you did the company has committed some violation, which is against some environmental law. In that particular law, there is no responsibility on you to report to particular authority, forest department or something, environmental department or something. There is no such responsibility. Then also Noclar is not applicable. Then also Noclar is not applicable. As per ISBA code, disclosure of matter would be precluded if doing so would be contrary to law. I mean, if the law specifically says you need not report, if the law specifically says you should not report, or if the law is silent, you need not report. Take a legal advice. See, better thing is always take a legal advice. You're doing audit of pharma company. You came across some non-compliance with the Medical Council of India guidelines in a vaccine manufacturing process. Consult a legal advocate who is expertise in that particular pharma related business, and then accordingly respond. He will guide you. But what it is asking you is be skeptical, be prudent. So Noclar will be applicable if a professional accountant come across or is made aware of non-compliance, suspected non-compliance in the course of providing an audit service to a client or employment service to a client, he is not required to investigate, not responsible for compliance. You need not sit and tell the management, hey, do comply with that law, do comply. No, you are not responsible to discover all the non-compliances. In the course of work, you came across a non-compliance, then only Noclar is applicable, otherwise not applicable. Now you may tell immediately, sir, I came to know about one non-compliance, sir, I didn't report, sir. How do ICI will know that I came across a non-compliance? How do ICI will know that I came across non-compliance? Generally, whenever we are working, we have a habit of documentation and discussion with people. When simple logic, ma'am. Tomorrow, suppose you discover some non-compliance. And you didn't report to anybody. Fine. Someday it will be reported, right? One day, at a fine date, it will burst out. At the time, investigating agency will start investigating. At the time, the investigating agency discovered that this knowledge of fraud, this knowledge of non-compliance is already known to the auditor. Employees are saying that auditor also aware of it. That time they will call you. Simple. Until then, you don't have any problem. Until that particular consequence comes, you will not have any trouble. In Punjab National Bank or ABG Shipping Yard, almost a fraud is happening from 2013 or 14. But it was not reported until 2022. Only in 2022, now people are questioning what auditors are doing. Simple. So, what is the objective of this Noclar? Now, let's look at what is the objective. What Noclar is trying to tell. Okay, the objective of Noclar is that turning a blind eye to potential Noclar is not an appropriate response from the professional accountant. Dear professional accountant, if you come across any non-compliance, don't behave like a blind person. Don't turn blindly. Don't ignore it. Okay, don't ignore it. Please discuss it with the management and those charged with governance and disclose it to appropriate legal and regulatory authorities after taking legal advice. While placing renewed emphasis on the role of management and those charged, because they are the one who are primarily responsible for compliances. Further, it increases awareness and understanding among accountants like us of their legal and regulatory responsibilities when they face non-compliance with law and regulation. When a professional accountant come across non-compliance with law and regulation, this Noclar guidelines provide me what should I do, what I cannot do. What I can do, what I cannot do. Simply, until this Noclar guidelines come, we only have SCA 250 with respect to laws and regulations, non-compliances. Now with Noclar, we understood that we have much more responsibility than what is given under SCA 250. But I'm telling you, it will take at least 1.5 years to get a concrete output of Noclar, to get a concrete examples on Noclar related, effect. So what is the difference between non-compliance with laws and regulations as per Code of Ethics and standard on audit SCA 250? SCA 250 is applicable only on audit, not on the other assurance engagement. However, Noclar covers professional accountant service as well as practice, all assignments. Only temporarily listed entity audits are covered. Otherwise, Noclar is for all assignments. Among those in practice, it applies to auditors as well as professional services other than audit. So it is applicable for audit as well as non-audit. However, degree of responsibilities of professional accountant varies depending upon the role. What is the responsibility varies depending as per the role. SCA 250 talks of auditors' responsibilities for law having direct effect on material amount and disclosure in financial statements such as tax and labor laws. Other laws and regulations that do not have direct effect on amounts and disclosure in financial, but compliance is fundamental to operational aspects of the business. So Noclar is further ahead of SCA 250. That it takes into account non-compliance that cause substantial harm resulting in consequences to financial and non-financial terms. Noclar is related to effect of non-compliance on investor, creditor, employee and the general public. Everyone is covered. Whoever is the affected party, Noclar rules are applicable. As per Noclar, now you see here this point is even more important. As per Noclar, in exceptional circumstances, I am telling you, it is very rare. The professional accountant might become aware of breach of law, imminent breach of law or regulation that would cause substantial harm to investor, creditor, employee or the general public. So very rarely we come across any law. Having first considered, first if the moment you got, it is appropriate to discuss the matter with the management or those charged with governance. First discuss with top management. Then exercise professional judgment and determine whether to disclose the matter immediately to the appropriate authority. Suppose if it is a fraud for more than 1 crore, you need to report immediately to central government within 60 days. In order to prevent or mitigate the consequence of such breach, in order to mitigate future bigger loss, immediately report. Immediately report. If disclosure is made, the disclosure is permitted. Generally, only if the disclosure is permitted by law or regulation, you have to make the disclosure. The provision is not inconsistent with the SA 250. It is not inconsistent because in SA 250, it is only talking about effect on the financial statements directly or indirectly. So what is the steps for responding? This is again an important aspect. This 8th point can be asked as a 3 marks or 4 marks question. Only 8th point. What are the steps in reporting under Noclar? Or they may ask you, what is the relationship between Noclar and SA 250? This can be asked for 4 marks question. Important for May attempt and November attempt. Okay. And definition of Noclar. What is the Noclar meaning? Meaning of Noclar. Second point and third point together you need to write. And give few examples of Noclar. So they may ask you 4 marks question. What do you mean by Noclar? What it does not include. Third point and second point together they may ask you for 6 marks. That is also possible. That's it. What is the objective of Noclar? And what are the factors while considering the Noclar under Code of Ethics? 5 and 6 point together they may ask you. What is the objective of Noclar? What are the factors to be considered? So this itself is relevant for 4 marks question. See how they can 2 and 3 point together they can ask you a question. 5 and 6 points together they can ask you a question. And 7 and 8. 7th point alone can be asked as a question. 8th point alone can be asked as a question. So what is the steps for responding to Noclar? How do you respond on a non-compliance if you come across? First, look at the matter. Okay, addressing the matter, like first report to the top management, then take a legal advice. Check, is there any further action required from you? Like do you require to report to the appropriate authority? Check it out. And is it a breach or not? Finally conclude and document it. Simply document all these steps. You have to document. Suppose the appropriate authority would be SEBI in case of fraudulent financial reporting. If you discover a FFR in a listed company, you need to report to SEBI. Appropriate alignment has been made in code with regard to requirement of confidentiality as required under CA. Already in Code of Ethics, a member of the institute, example you see, what are the provisions of confidentiality if you check? Provisions of confidentiality, a chartered accountant in practice shall be deemed to be guilty if he discloses information required in the course of his professional engagement to any person other than his client or so engaged without consult of the client. So if you come across any issue of the client, you should not disclose that issue to anybody without permission of the client or otherwise than required by law. This was an amended one. Of course not now, it was amended long ago. Earlier it used to say, Code of Ethics of ICI says earlier, once upon a time, without permission of the client, information about the client don't disclose to the authority. Now what it says, otherwise than, if there is a requirement under law, client permission not required, you can disclose. That's it. Same for members in service also. Same. See, these two provisions. One is clause 2 part 2 of second schedule, clause 1 part 1 of first schedule. Both we discussed in the upcoming videos. That is why I am asking you to read this question, watch this video only after completing entire ethics chapter. You will connect to this better. Now same way in ethics also we have one more question. We have one more schedule. What is that schedule? Left side you see. Second schedule of part 2 clause 1. What it talks about, it says, suppose now you might get, sir, what if I don't comply Noclar? Future ICI discovered this. They will punish you under clause 1. Part 2 second schedule. What? If you fail to comply with any CA regulations or guidelines or ethics, professional standards, you are treated as professional misconduct under schedule 2. Accordingly, punishment as per schedule 2 applicable. That's it. Documentation requirement of Noclar. This itself can be asked as a question again. The documentation requirement can be asked as a 4 marks question. You need to write any 4 points. You please strike off F and G, not required. No, not that. Sorry, just a minute. E and F not required, not necessary point. So the revised code over and above require professional accountant to follow additional documents as follows. How management responded to the non-compliance. Matter means here what? Non-compliance. Noclar. Noclar is what the matter. The course of action accountant consider. The judgments made. Decisions were taken. Having regard to reasonable and informed third party test by taking legal advice, all that. What decision you have ultimately taken? Suppose you decided not to report. Why you didn't report? Have you considered legal advice? You need to document all that. How accountant is satisfied that responsibility of public interest has been fulfilled. So how do you say public is not affected? Or how do you say public is affected? And by reporting this to a lawmaker, have you fulfilled the public interest? See, on this, guidelines have to come. Even more still guidelines have to come, since it is being implemented from 1st April 2022 only. Okay, we still do not have any concrete cases on this, how this Noclar is going to affect our work culture, how it is going to affect our CS work culture. It is not clearly identifiable right now at this moment, but still it's part of syllabus, so we are discussing. This documentation is in addition to documentation requirement as per standards on auditing. Noclar documentation you should maintain a separate bunch. SCA 230 documentation you have to maintain normally. And document identified or suspected non-compliance and the result of discussion with the management, those charged with governance and other parties, all that discussions related documents you need to store, documented. This is Noclar documentation. This itself can be asked as a 4 marks question. A, B, C, D and G point are the relevant points. Almost I took 45 minutes to explain, but still I'm telling you, I am going to connect this with liabilities of auditor chapter. There you are going to get even more better clarity, the Noclar concept. Though we don't have any express concept in that material, but I will connect Noclar to that particular, liabilities of auditor chapter, which is a second category chapter. Right? Liabilities of auditor, insurance audit and fiscal loss. These three are second category chapters. Only if you have time, please watch the video and then read. Otherwise you can ignore them, whether you are a full course student or smart course student. That's it. So this is part 2A video in professional ethics. But actually I'm requesting, I hope you are watching this video at the end of the professional ethics videos only. I hope so. Though I should have put this video at the last, but I just added it as 2A because after question number 3 we need to add this video, so we added it. That's it. Carry on. Have a nice time. So that's about Noclar and SCA 250. Now what you have to do, close the video and read once again SCA 250 once and this. Just give a single reading to SCA 250 and this. Enough. I hope you have already watched the Noclar concept. Now regarding that Noclar, there is a slight amendment. Actually people think these are amendments in ethics, but I'll show you these are not amendments at all. These are just clarifications. You see, so in the amendments book issued by ICI, there are some, there are some provisions which council has discussed in their 413 meeting. Okay, 413 meeting, the council has discussed something. Okay, and some provisions, they were deferred earlier and now applicable from 1st October 2022. Okay, now there are some amendments related to fees to be charged. It's not about fees to be charged, I can say. It is about fees charged by practicing units, disclosure to the institute. Disclosure to the institute about fees charged by the practicing unit. By the way, this right now, whatever you are watching, it should be done after completing Noclar timestamp. I hope in the timestamps, Noclar concept you have finished. Okay, after that come to this. Okay, before I talk about fees, something related to Noclar. I hope you have seen the Noclar provision where you understood that, Noclar, non-compliance with laws and regulations, the provision is applicable for all practicing chartered accountants and all employees who are CS, who are members, who are in service also, it is applicable. Now it is clarified that earlier Noclar is applicable for employees of all listed entities, but now it is applicable only for senior professional accountants in service, being employees of listed entity. If you are a CA and you are employed in a listed entity and you belong to the senior professional accountant category, only then Noclar is applicable for you. Which means, suppose if you newly qualified as a CA and in a listed entity you joined, okay, for some role, getting it, for you Noclar do not apply unless you fall under senior professional accountant definition. This is relevant for MCQ in exam. So they may give you a brief case kind of thing. Below they'll give the Noclar is applicable for all professional accountants whether in practice or not. Noclar is applicable for all professional accountants who are in service of listed entities. Noclar is applicable for all professional accountants who are senior professional accountants in listed entity. Then option C is correct. So this is how they can test. Okay. Earlier, before this amendment was came, Noclar is applicable for all employees. So that is what we have covered original. That's why you see Noclar video. We first covered the main provision of Noclar. This is a main and original provision. Whatever I have covered. I hope you would have understood. Getting it. Then now what they clarified after the main provision was issued, now they are making it applicable for senior professional accountant. Now who are senior professional accountants? Senior professional accountants in service are nothing but directors, officers, senior employees who are able to exert significant influence and make decisions regarding acquisition, development, control of the organization's human, finance, technological, physical, intangible. Simply who can influence the company's decision-making process, and those chartered accountants who can influence company decision-making process who are in service, employed in that company, were treated as senior professional accountants. So this is one amendment in Noclar. Original Noclar provision, I hope you saw. You gone through that entire, almost it is 45 minutes. Original Noclar provision. I hope I clearly explained you the difference between the Noclar and the SCA 250. I hope you understood. Now, what is the revised one is saying? It is saying in case of members who are in employment, Noclar is originally applicable to all employees of listed entity. But now it is applicable only for senior professional accountants. Next. Now what is senior professional accountant in service definition? The definition has no change. Definition is same. But earlier it is applicable for all employees of listed entities. But now it is applicable only for senior professional accountants in service of listed entities. Now, what about Noclar applicability for CAs in public practice? Nothing but chartered accountants in practice. You know, earlier they used to say Noclar is applicable for audit engagements of all listed entities. They used to say earlier old provision. That's what I told in the Noclar original provision also. See, first I covered original provision. See, if I have to discuss amendment, first I need to discuss original. Then I need to discuss amendment. So what I gave you in this amendments video, first I gave timestamp Noclar concept, original provision. Now I am giving you amendment. So original, as per the original provision, whoever is doing audit of a listed entity, for all of them Noclar provision is applicable. Now they have added one more monetary criteria. Of course, it is applicable for audit of listed entity provided that listed entity satisfies some monetary criteria. What is that? Here you see. Okay, it is applicable for audit engagements of entities, okay, the shares of which are listed on stock exchange, and you see this is the amendment, and have net worth of 250 crore or above. Only if that listed entity is having a minimum net worth of 250 crore and above, only then those chartered accountants who are in practice and doing audit of that listed entity having 250 crore and above turnover, net worth, only for them Noclar is applicable. Which means, suppose if I'm an auditor of a listed entity whose net worth is less than 250 crores, Noclar do not apply. That regulation do not apply. Getting it? Now, what do you mean by audit engagement? Suppose here they said no audit engagement of listed entity. Here also they mentioned auditing. What is audit engagement? Earlier they have one definition of audit engagement. Now you see the revised definition. Audit engagement shall mean a reasonable assurance engagement in which a professional accountant in public practice expresses an opinion whether financial statements are true and fair as per applicable financial reporting framework. Getting it? So, and measures to be taken in case of breach of Noclar. There is a provision earlier, original, now it is repealed, means it was taken off. There is no more provision for that. So now audit engagement definition has been changed. This audit engagement definition is relevant for MCQ or maybe relevant for short answer question. Write about audit engagement definition as per Noclar. They may ask you this question. Write about applicability of Noclar to professional accountants in public practice and also clearly explain what do you mean by audit engagement. So they will ask you a 4 marks question on this. Right now, whatever I told. So they may ask you a question on applicability, and they'll ask you a question. They'll continue that question with define an audit engagement. That's it. So this is something related to Noclar. Earlier old definition, no. It's a reasonable assurance engagement in which you are expressing opinion on financials, whether they are in all material aspect prepared as per framework, such as an engagement conducted as per standards on auditing. This includes stat audit, which is an audit required. So earlier the definition was very detailed. Now the definition was briefly, they just squeezed, they just simplified the definition. That's it. Technically speaking, there is no change in the definition. Only thing is they simplified the definition. Getting it? Next. So this is an amendment related to Noclar applicability. So Noclar is applicable for employees who are chartered accountants. Noclar is applicable for those chartered accountants who are in practice, for both of them. But in both the cases, what is the applicability conclusion right now? For employees, if you are a senior professional accountant in a listed entity, Noclar is applicable for you. Then you are a CA in practice. For you, is it applicable? Yes, it is applicable, provided you are doing audit engagement of a listed entity and having 250 crore and above net worth. Only then Noclar is applicable. So applicability of Noclar has been changed. Please remember. Applicability provision for Noclar has been revised. So for employees, it is applicable, provided he is an employee of listed entity and moreover, he is a senior professional accountant. Noclar is applicable for even for CS who are in practice, provided they are appointed as auditor for listed entity and that listed entity has a minimum net worth of 250 crore. That's it. So this is provision. This is amendment related to Noclar. Then coming to this is something about disclosure to the institute. Technically speaking, this original provision itself is not discussed in CA final ethics book. It is not discussed. Getting it? But it is covered here. So let us just discuss briefly. This is not important. This amendment is not important. Only Noclar related. Only from here it is important. Whereas the above, this amendment is not important at all from exam point of view. Here there is a disclosure. Let us first read a disclosure requirement for the practicing CA firm. This is a disclosure requirement for the practicing CA firm. What practicing CA firm has to do? This has to disclose to the institute what? Disclosure is required where for 2 consecutive years, the gross annual professional fee from an audit client represent more than 40% of the total fee received of the firm. Suppose non-public interest entity and public interest entity. Non-public interest entity, 2 consecutive years, 40% of gross annual fee, 40% of the total annual fee of the firm. Suppose my firm is providing so many services, audit, non-audit, all that. My firm turnover is 1 crore, let us assume. Now, when I see my breakup of the turnover, from which clients I am receiving? I am receiving 40 lakhs out of my total 1 crore. 40 lakhs I am receiving from one particular client. And that client is not a public interest entity. I mean, public interest is not there. Public interest entity means where borrowings were there. Borrowings were there. Public interest entity concept is defined in peer review. In peer review, I think in the timestamp peer review, when we are discussing amendments on the peer review, you might have understood what is public interest entity simply. Where they are having borrowings from public, where they are having capital raised from public for a certain amount it crosses, then we call them as public interest entities. Public interest entities means where public money is involved. Non-public interest entity means what? It's an entity where public money is not involved. So it's a completely private sector, I can say. Getting it? Now, so here, if at all, out of your total turnover of the firm, 40% of the turnover is generated from one client. Getting the point? That too for 2 consecutive years, which means your firm is dependent on them predominantly. Intimidation threat is possible. Self-interest threat is possible. Familiarity threat is possible. Why? Because you are depending significantly. Most of your firm, major portion of the fees is received from one client. One client is deciding your firm's continuity, going concern indirectly. 40% fees means is not normal. In my total business, 40% is only from one client. Means that client can influence your integrity. That client can influence your independence. That client can influence your overall performance of an audit. If there is any such client, nothing wrong. See, accept, it's okay. luckily you got a big client and they're paying you major fee. What's wrong? The institute is asking disclosure. You have to file annually some forms with the institute. Being a practicing CA, you have to disclose to the institute if one particular client is paying you and a fee, audit client is paying you a fee, which is 40% of the total fees charged by the firm. For 2 years, he continuously gave like that. 2 years, you continuously meet this 40% criteria. You have to disclose. Sir, suppose I have public interest entity clients also. I have clients who are public interest entity. For them, same 2 consecutive years, 20% is only criteria. Suppose if I'm doing audit of a public interest entity, they are paying me audit fees, right? That audit fees divided by my firm turnover, 20% it is. Then also I need to disclose to institute. So this is one disclosure requirement which they brought. Next. Now, this disclosure requirement is there, no? Suppose if you are receiving any fees from audit entity, which is non-public interest entity, 40% of the total firm turnover is from this fellow for 2 years, you need to disclose. Public interest entity, 20% of the total turnover of the firm for 2 years, you need to disclose. This disclosure requirement is exempted. This disclosure requirement is not applicable for few audit firms. Which audit firms? If the audit firm total fee does not exceed 20 lakhs. My total fee itself 20 lakhs does not exceed. Suppose I am having 20 lakhs only turnover exactly. Let us assume 8 lakhs fee I am receiving from non-public interest entity and some 4 lakh I am receiving from public interest entity. Logically speaking, this is 40%, this is 20%. Now, should I also disclose? My total business itself is very small, less than 20 lakhs turnover. No need. For you, it does not apply. Suppose if your firm turnover is more than 20 lakhs, now check how much fees you are receiving from non-public interest entity audit client. How much fee you are receiving from a particular public interest entity audit client. What is his fee percentage to the total turnover fee? If it is more than 20% in case of public interest entity client, disclosure is required. If it is a non-public interest entity client, more than 40% of the turnover is generated from him for 2 years, disclosure is required. Now this entire disclosure requirement is exempted for whom? It is exempted for those CA firms whose total turnover is not exceeding 20 lakhs, less than or equal to 20 lakhs turnover, exempted. This is not an important. Earlier, no, we need to disclose it to the client of the organization. Earlier, this disclosure is required to be disclosed to the audit client. We need to disclose, dear management, you are the major client to us. Like that, we need to disclose them only. Now, that has been changed to disclosure to the institute. Obviously, institute has to regulate them. Institute should know their members receiving significant fee from any particular client. They want to know. You know, if you disclose to institute, what happens? Nothing happens. Institute, when applying, when selecting for peer review, when selecting for any special reviews, will give priority to these audit firms. They will select these. These audit firms are having big clients where their major revenues from one particular client. Let us select them and see how they are working, how they are complying with the provisions. Let us look at them. So that is the reason. That's it. This is ignored, not required. Then we have another one. This is also court definition. It's just that court does not include tribunal. They just clarified court does not include tribunal anyhow. So ignore that. That's not required. So it is about disclosure of fees charged by audit firm from a particular client exceeding a particular percentage of the total fee. For 2 years, you need to disclose. The firm has to disclose that fact to the institute. Earlier, they used to disclose it to the client himself. Now that is not correct. The institute you need to disclose. That's it. Okay. So these are the amendments in ethics. I hope almost this 4, 5 or maybe 6 hours probably. I'm not sure exactly. Okay. Because I'm now recording. Maybe after merging only I'll understand how many hours it is. So I hope you thoroughly enjoyed all the amendments or entire this thing. Getting it. Along with this amendment, please watch the revision marathon also, which I uploaded 1 month ago. So for May 23, 2 parts I have uploaded for 23 hours. Watch that and you see, you will enjoy like anything that particular thing. Okay. So have a nice time. Take care. All the best. And one more thing, by the way. Okay, fine. That's it. Carry on. Okay.